Yeah, so thanks again. So what we're going to talk about here today are two really great low risk, high reward type of option strategies that are really good for any kind of market environment, but especially when you get in kind of more uncertainty type environment or extreme volatility. So we'll go through the butterfly and long condor, so to kind of go over why they are such great strategies for uncertain markets or any market kind of condition in general, but especially when you get higher extreme volatility type markets because of the lowered capital at risk and the time decay aspects and different benefits there. So let's get started. So today's presentation is purely for educational purposes. Any stocks, options, futures, or ETFs mentioned does not constitute advice and should not be construed as a recommendation. Now, to me, the secret to trading profits really comes down to three things: direction, timing, and then risk management. And that's going to be through the use of options. And options are so great because we can do so many different things with an option by mixing and matching different option spreads. So it's kind of what we call opportunistic risk management. Now, option trading, it has so many more advantages than trading outright stocks, but as you probably know, it can be a bit more complicated. But once you understand the benefits and the advantages of options and option spreads, you're really going to never look back. So when used correctly, option spreads are going to provide you defined trading risk, very defined risk, and it's going to what they really help you to do is lower your capital at risk, and they're going to then provide you greater trading leverage and also unmatched hedging advantages. So when I look at a trade setup, the first thing I look at is always the risk side of the trade, and then I look at the risk, and then I look at what the potential return could be on that risk. But I always start and look at the risk first. Now, I've been trading options for over 30 years, and I've found that the most valuable go-to option strategies that can really help any trader more than any other trading strategy known, and especially during times of extreme market uncertainty, are going to be using the butterfly and the long condor. So they're kind of like my trading secret weapon. Now, the huge advantage that these strategies are going to provide you is that they're unique option framework that's designed to take advantage of both time decay and volatility. So these are the two main option pricing components. And so by understanding how to take advantage of these two components, you can really shape the trade and stack the trading odds better into your favor. And they can be used, like I said, in any type of market environment, but really become a favorite when we're in more extreme uncertainty type markets because of the risk parameters that we can control much better. So if you just know when and how to use them, then it's going to be a great strategy to go to. Now, because they're structured to require only a small amount, of your trading return, your capital, your trading returns can be very explosive, and then your trading stress is going to be a lot less than other types of strategies. So to me, it's kind of like lightning in a bottle. You have that potential for explosive return, but that return come in on smaller risk. So it's a win-win kind of setup for you. Now, when we look at the butterflies and long condors, they're very dynamic and they can be traded for a variety of different reasons with different goals in mind. So in other words, you learn how to trade the butterfly and condor, and you're going to be covered for both your offense and your defense. So, your goals, protection, your profits, and hedging. Now, these two strategies can work no matter what the market trend is. So we could be in a market cycle that's a cycling trend up, down, or sideways. They can provide income from stocks that are going nowhere. Really helps to eliminate the stress of having to be perfect on a stock's direction or overall market. Helps to eliminate the time decay expense that's encountered from decaying long options, which is an obsession of mine. Helps to really take the unsettling guesswork out of your trading because it gives you a lot more flexibility on the structure. Can be structured for very low capital at risk or low cost, and can provide you returns of 10 to 1 or higher, as you'll see here today. Now, when we look at the butterflies and long condors, they can also be used for hedging when you mess something up. So we're going to always have a trade at some point that's going to start giving you problems or going against you. And these two strategies can be used as a fast, low-cost way to cover your pronto when a position starts to move against you. And I've literally found no other hedging strategy that comes close. So I always tell my members and clients that if you don't know how to hedge, you're a trading accident waiting to happen. Now, when we look at this kind of the butterfly condor for hedging, if you look to construct either the butterfly or long condor around a strike that is under pressure from another core trade, such as if you're doing credit spreads maybe or debit spreads, it's become the best way I've found to immediately neutralize the risk. But not only does it neutralize it, it's going to lower your risk. And a lot of you, I don't know if many of you out here do credit spreads, but it's a really great way to fit a credit spread before it starts to go against you. So this is, one of my members, Pam, she said, I wish I'd known how to do this hedging before I lost so much money doing credit spreads. And that's so true. And the butterfly or condor can alleviate that very quickly. Now, when we look at hedging, you can, these two strategies really help you to do is it lets you keep your original position open by just implementing either the butterfly or long condor hedge on that original position. So what this hedging strategy or these spreads can do for you is that they're going to take advantage of time decay. So while you're waiting for maybe that trade to stabilize and turn back around, you're going to actually be getting paid while you wait. So a lot of times, you get into a trade, it looks great, and then all of a sudden some headline comes out and just, knocks the momentum out of that trade, and then it stalls on you or pulls back. And then you're left with, okay, what should I do? Should I stop the trade out? Or is there a way that I could buy time to let it stabilize? So this is what these two strategies can do for you. Just to give you that little bit more time a lot of times is what's going to really make a difference. So once it's stabilized, you'll see a lot of times your trade then will move back into your favor. And at that point, you can either leave it as the butterfly or condor, the way you structure it, or you can, you can remove the original hedge and ride the original trade. Now, when we look at the butterfly and condor, they're very, very kind of a simplistic strategy. So if we take a look here, basically what you're looking at here is like a call debit spread. So let's say you're long a call and short a call here. So a call debit spread, or you can do it with puts. And your risk here would be like $300 on this spread. So, if at expiration it closes above the short strike of your call debit spread, you would make, in this example, $700. Your risk then is the $300 debit cost. So it's a defined risk trade, but I try never to lose the full amount of capital at risk. So the other thing we could do to this, we could reduce this risk or neutralize it even more by converting this, if we wanted, to a butterfly by adding a short bear call credit spread to it. So if we did that, we're going to be, bringing in credit from the credit spread. So if we sold a credit spread here and we brought in $200 credit right here, now we've reduced our risk on the original call debit spread down from 300 to 100. All right, so we've now just converted or adjusted this trade into a balanced butterfly here. So we had the call debit spread here, we had another credit spread, and now we've reduced the risk to 100. So we have now flexibility to either leave this trade as the butterfly, and if it goes out in our profit zone, we can actually make a greater return on the reduced capital at risk, or we can leg out either side. We could close out the debit spread side, or we could close out the credit spread side, or we could even add additional credit spreads, et cetera, to it and make what we call ratio butterflies. So there's a lot of flexibility to this trade. Now, the other kind of part of the butterfly family is the long condor. And this is one that we use quite a bit at Paracycle Trading as well, because what it does is it widens out your profit zone. So with the butterfly, it's a great one because we can really lower the risk quickly, but we've got a little bit tighter zone to thread as far as trying to maximize the profit. But with the long condor, we can, again, do calls or puts. We can widen out this profit zone to give us a bigger area to profit from. So it's usually kind of our first to go to kind of hedge, is we will tend to usually start with the long condor, and then we can, if we need to, we can add to it additional legs, or we can roll it down into a butterfly. So it's just a matter of understanding the spreads and how they work. Now, the core concept that the butterfly and condor use are very dynamic. So let's talk about that. When we look at options in general, but especially these types of strategies, the most important option factor for profit generation when using the butterfly or long condor really comes down to understanding option pricing and how it works. And so one of the big components is going to be time decay, or theta. And that's going to really have a major impact or effect on the price of your option. So let's take a look at how that works. Now, when we look at time decay, or theta, what theta does, it tells us how much an option price will go down over time. So it's the rate of the time decay of your stock's option. And time decay occurs because of that extrinsic value, or that time value of your option goes down each and every day. And at expiration, it's zero, right? So it's a decaying asset. So that's what we're going to take advantage of with both the butterfly and long condor, because they have both a mix of a buy side component and a sell side component. And the sell side is what's going to be selling time and volatility to take advantage of those two option pricing components. So let's take a look at the construction of the butterfly and the long condor. Now here's an example. So let's say you had XYZ, it's trading at $45, and you're just looking for a move down to 43. So with butterflies, they're fantastic because we can do very small moves or large moves, but we can also use them for very shorter duration kind of time trades because of the advantage you get from time decay. So in this example, we're targeting 43. So whenever I set up a trade, I always have a profit target. So this one is 43. Typically, I'll use Fibonacci levels for targets, option activity, and any kind of major moving averages for support resistance. So for example, in this trade setup here, we wanted to target 43. So what we would do is we're going to buy the 44 put, and that's going to cost $2.38 or $238. And then we're going to sell the 43 put. We're targeting 43. So typically I'll set the body of the butterfly at the target price. So we're bringing a $1.67 credit. And then we're going to sell that credit spread. We're going to sell the 43, 42 put, bring in another $1.67. So that just created a kind of a narrow wing butterfly. And your wings then are the 44, and then the body's going to be at 43 here. Now your spread width is, $1. All right, 44, 43, 43, 42. That's $1 wide spread. So that would be $100 wide spread width. So if you take your debit cost, $238, $6, less your credit received, times 100 to make it into an option contract, the risk on this would be just $10 per butterfly spread. That's the max. So that's the max you could lose, is your debit cost here. Now your profit then is you take your spread width, your middle strike, so 43 minus 42, so $1 wide spread or $100. Minus the cost of the trade. So theoretically, you could make 90 cents, which would be $90 per spread. So you could see the dynamics of this. If you were potentially going to make $90 and your risk is 10, that's a 900% return. So you're risking $1 to theoretically you might make $9. But if you make anything in between, that's still a huge return on your capital at risk of only $10. So that's the thing that makes it such a great strategy in low or high uncertainty or extreme markets, because we can really narrow our risk down. Now let's take a look at the butterfly and condors, and let's take a look at the different variations for selecting the one that might best suit your trading needs or trading goals. So to me, one major goal for every trader really should be to select trades based on what's going to provide you the most consistent positive return over time with low defined risk, and not always the greatest. So I'm always looking at, like I said earlier, risk first, and then I look to see what can I make on that risk. So to me, one of the best ways then to achieve this is by being aware of what the different option strategies are out there and available to you, understand how they work, and then select the one that's going to be best suited for the market environment you're trading and your specific trading goals. So Vogel might have a trading account of $100,000 and Susan maybe $10,000. So that's going to have an effect on your goals as a trader, your risk profile as a trader, the amount of capital you have when you trade. But one thing you're going to learn if you start using butterflies and condors, you can use these two option strategies for any size trading account. You can have 1,000 or 5,000, or you can have $1 million account. So they're very flexible and they're very well used for any size trading account. Now, when we look at the butterfly, I kind of call it the butterfly family. There's a number of variations. So you can use calls or puts for a butterfly. We've got what we call the broken wing call or put butterfly, sometimes referred to as a skip strike butterfly. We've got the ninja butterfly, I call it the ninja, but it's basically an unbalanced or ratio butterfly. We've got the iron butterfly, and then we've got a category, the hedging, which is fantastic using these two strategies. And then we've got kind of its cousin, the long condor option spread. So let's take a look at these different variations to give you a better example of how they work. So first, let's take a look at a butterfly. So the balanced butterfly. Now, we can then adjust the risk of a butterfly or the spread by the wingspan of the trade or the spread. So if you think about it, if you're a butterfly collector, you're going to have a much easier time catching that butterfly if you've got a really wide net versus a small butterfly net, right? So we can do the same thing with the butterfly. We can adjust the wingspan to make it a really wide wing butterfly to give us a bigger, huger profit zone. Or if we want to really narrow our risk down, reduce our risk, we can make it a narrow butterfly to really reduce the risk. But if we get it right, we're going to have a huge return on that risk because it's so low. So these are, sometimes I kind of refer to them as a lotto trade because you can put down very little but have a very big, huge upside return. So let's take a look at a few of these. So we're going to look at the directional long butterfly, and the ETFs are great for butterflies. So SPY, QQQ, the Russell IWM, and the index options, SPX, NDX, they're great for butterflies because the liquidity is good. Now, this one is going to be a narrow wing butterfly, so the spread width is going to be $100. So we're going to have this super low risk trade. So in this example, it was a, call butterfly. And again, I like to use Fibonacci kind of levels for my targets. So in this example, we were targeting the 618 retracement here coming in about 273, 274. So we did this setup using a very tight, narrow wing call butterfly. And so it was trading down here about 265, and we're targeting right here to that 273 area. So what we did was bought the 272 call. Again, our target's 273, and so we're targeting here. So this is typically I put that as the body of the butterfly. So we bought the 272 call, sold the 273, sold the 273, bought the 274. So if you look at this and break it down, that's a call debit spread, and then there's a bear call credit spread. So this turns into a narrow wing butterfly of $1 wide. So then our risk is you take the risk, the spread width, $1, which is $100, less the cost of the trade. So in this trade, it was 10 cents, 10-cent debit or $10. So the difference is your potential profit of $90 per spread, which would be a 900% return. So again, risk $1 to make 9. So of all the option spread strategies, the butterfly will give you the highest return on capital of any option spread strategy. So in this example, 2 days later, this trade was up $70 per spread. So if you look at that, you might kind of blink your eyes and say, wow, no big deal, 70 bucks. But look what the return is. Your return actually is huge. That would be a 700% return because your capital's so low. All right, so let's take a look at how this kind of pans out. So if we look at the profile here, you can see that it was going out right here at expiration on the day of expiration. That's where you get the maximum profit from any option trade, but especially these type which take advantage of time decay and volatility decay. So you can see it was almost at the top of the zone here, that top of that tent. All right, so it was trading at 273.08 towards the end of the day on expiration. So it sucked out all that time that was left in it, which goes to zero at expiration, and volatility, and that's the two big pricing components that really provide a lot of profit. So this went from 10 cents to 80 cents on that day, and so that's a 700% return. So on this example, it's 4 contracts, that's $280, but your risk would have been maximum risk 40 bucks. All right, so it's really taking great advantage of time decay, volatility collapse, and a high return on capital at risk, which is that debit cost of the trade. Now here's an example, a really cool example of a wide wing butterfly and the different reasons to use it. So when we look at the wide wing butterfly, these can be structured for very defined risk and great for hedging, used for targeted directional swing trades, trades that last a day or longer. Great for what we call pinning, where you're trying to, you see a certain strike price that you think the market might, on expiration, go out at that strike. So we call that pinning. These are great for trading that pinning strike. Great for high volatility markets. And here's another great advantage. Very great for high price stocks. So if you're, missing out on trading the Amazons, the Teslas, the GameStop or something like that, and you did want to trade those stocks, well, they may be way too expensive for your capital account, but you could always trade them using a butterfly. So I'll show you this example. These duration of the trade it could be just 1 day to 2 weeks, no time decay, so it's a positive theta, and you get great potential capital return of 2x to 10 or higher. So here's an example of a wide directional butterfly on Amazon, so $1,000 wide spread. So here are the big benefits. So first off, Amazon in this example was trading on the support level, 200-day moving average. And we're looking for it just to kind of move towards this 1830 level, but we wanted to keep the risk super low. So at this point in time, it was trading $1,780, $1,782, and we were targeting 1830. So, you could have bought the shares, but if you did, that's going to cost you $178,200 to buy 100 shares. Now, if you'd done that and you hit your 1830, well, you made a $48 per share profit, but look at your return. It's only 2.69% return on a huge amount of potential risk of that capital. But you could have done the same trade and controlled 100 shares here by doing one butterfly, or you could have done 10 or whatever. But here's the beauty. So if you look at this different example here, rather than buying the shares or going, even if you went long calls, they're going to be super expensive. But here we were targeting 1830 with a call butterfly. So bought the 1820, sold the 1830, sold the 1830, bought the 1840. Now you can see it's a $10 wide spread. So $10 times 100 to make it equivalent to an option contract. So your spread width is $1,000. But look at your risk. Your cost of the trade was $80 or 80 cents. All right. So look at the difference there. $80 of risk. If you got it totally wrong, you lose 80 versus here. If you get it wrong, you have a huge potential downside risk. Now with this one, if it did hit your target exactly at expiration, which, theoretically it could, but it's never will. But look at the potential. When you do value this, it potentially has the potential. If it made that perfect strike or expiration at 1830, this would be $920 profit per spread, which would be 1,150% return. So you're risking $1 to potentially make 1150. All right, but think about it. So if you make 1,000%, but would you be happy with if you made 100%, if you made $80 per spread or 160, et cetera? So you can see the big, huge benefit. So that's a huge benefit, trading a high price stock for very low capital at risk, but it even gets better. So let's take a look at the next step here of what this advantages are. So here's another huge advantage. So you'll see this is at expiration on a Friday expiration. So this is where it was trading in the morning of the expiration day on the at expiration on that 9th. Okay, so in the morning on the September the 6th, this was trading at 136.55. So it had gone past the target here of 1830, but it was still, because it had a wide butterfly, we had a pretty wide span in there, it was still up $150 per spread. So if you'd risk it, if you just did one option contract, you had a risk of 80, you were up 150. So you were up 187% return on that low risk of 80 versus a huge potential risk of if you bought the shares. So you can see it went from 230 to 80. Now, the big thing here is, look, see theta, that's a positive theta. So it's got $80 potential profit still left in the trade from the time decay component, but it was at 150. So not a bad return, but the next slide I'll show you is 4 hours later in the afternoon, and now this trade was up 4 times more. And that's because the time decay getting sucked out and volatility in the last hour or so of the trade. All right, so if you look at the, let me get this up here, the next slide. So look at the difference here in the same day. All right, so here it's trading a little bit closer to the 1830, but not much. So it's trading at 1832.55. But look now at the profit of this trade. So now it's up to $614 per spread. All right, so now it went from 80 cents the same day, but later in the day, to $6.95. So it's up $614 per spread, all right, on your risk of 80. So that's up 769% return. So this has gone up 4 times more, but within the same day, because see, at expiration, time goes to 0, volatility goes to 0, and that's why, it's, you can see this little black speck left there. That's what's left of potential still profit going into the end of the day. But that's the great benefit that you get from it, is that volatility being sucked out that's in the price, and time that's in the price on that expiration day. Now, they're also a really great way to short the market. So if you've been trying to short this market, it's been very hard. So when we take a short on the markets, typically we'll do it with the butterfly to keep our risk very low. So here's an example of a short trade on SPY. So we're going to have a defined low risk, great for high volatility markets where you get the volatilities, extremes, you get more premium. You can do these for a short trade of 1 day to maybe out to 2 weeks. Positive data, great potential returns of 2 to 1 or 10 to 1 or higher. So when we're looking at short, we typically will go to the butterfly again to keep the risk low. So we currently set up this week we had a butterfly on SPY for a short and QQQ for a short because we wanted to keep our risk low. So here's an example of a short trade. This was at this time it was trading at 392, and we were looking for a target. We were looking down here to this kind of fib level here at about 387 down to 387 range, potentially down to 386. So we wanted to do this low risk, so we did a butterfly. So we did the target, we targeted 385, and we did a put butterfly. So we bought the 390 put, sold the 385, and we could leg into this too, which is great. And then we sold the 385 put, bought the 380. So you can see it's a $5 wide spread. So 500 minus your cost, the trade cost here was 50 cents or $50. So that's your maximum risk if you got it wrong. So if you shorted SPY and it went straight up, or if it hit down to your target but you missed it and it goes straight up, you'd lose 50 bucks. But if it was perfect and you went out at expiration, you theoretically could make 450. Now this is a short duration trade, 2 days. So typically that's what we look for, on these short trades, maybe 2 to 3 to 4 days. So this thing had potential to make, 900% return, but we were just looking to short it. So this turned out $86 per spread profit on your risk of 50, so 172% return, but the risk is super low, which is the first thing I look at. So we had this pretty wide butterfly here, and it was trading into the edge of the profit zone, but still right here, it's trading at 387, 88, basically 388. And at that point in time, it was up $86 per spread. So it went from 50 cents to $1.36. Take it off there at your target, and then boom, 86 per spread on that risk, so 172% return. Now, the other thing I talked earlier about option pinning. So it's a really great strategy if you're looking at certain strikes, especially on a monthly option expiration, where you think a certain stock may go out at expiration at a certain strike. So it's a great way to add additional kind of income stream to your trading. And we can do these trades using these butterflies to keep our risk super low, but give a potential huge return on that risk. So here's an example of Apple. This was this was the April expiration. So this is going to be a trade with a spread width on Apple of $300. So great for, again, expiration trades, pinning trades. So we'll typically use Fibonacci levels and option activity to kind of focus in on what the potential strike price could be for expiration. But these are going to give you a defined trade risk of low trade risk. And we do these typically maybe 1 week out. So you can do it 1 week out or maybe 2 or 3 days out. Positive data and potential for big, huge returns. So here was the setup for the pin. So it was trading right here about, right here about 131 area. And we were just looking for it to pin and go out at about a target price of about 135 right in here. So there's a lot of option activity there, and then you see this Fibonacci levels right in this area. So we set up a low risk butterfly to do this. So bought the 132 call, sold the 135. That was our target for the expiration target. And you want to try to keep these and hold these into the expiration day, and then sold the 135, 138. So you can see it's a $3 wide spread, 300, minus your cost. So this is the key. Your cost, you can make these super low risks in case you get it wrong, and your cost here is $50. That's your max risk. So your potential profit, if you nailed it perfectly at expiration, would be 250 or 500% return. So this was going out, pretty good. It was on expiration, it was going out at the 134. So not perfect, not perfect, but see what the profit zone, still within a good profit zone here. So it's going out there. And so this was up $158 per spread right there on a risk of 50. So there is a 316% return in this trade from, basically a 4-day trade setup. So set it up on the 12th, took it off on Friday the 16th, which was monthly expiration. Now the next thing is hedging. Okay, so this is an example of using the long Condor spread to adjust into a Condor versus from either a put spread or a call spread. And this is what we call, a lot of times we can make this increase the value of the trade. I'm always looking for adjustments that can enhance or create a bigger value to the trade that you originally put on. So when we're trading, especially trading options, you want to start, thinking about it, trade it 2 or 3 steps ahead. So before you even put the trade on, be thinking about what you could do next to make the trade better, or what you could do if something happens and you need to adjust it or defend it. So it's kind of like playing chess or cards, okay? So you're always thinking ahead. So, but with the Condor, it's also defined risk trade, great for hedging. It's usually our go-to first hedge, great for swing trades, gives you a bigger, wider profit zone, great for high volatility markets because that risk can be reduced so low. These typically will go either, 1 to 3 weeks out on the trade duration. Positive data, returns of 2 to 1 or up to 4 to 1 typically. Now here's an example of taking a put debit spread that was the original trade 1 or setup and then adjusting it to a put Condor into a free trade. All right. So we were trading, this was a setup where it's trading down here about 275. And again, we're targeting based on Fibonacci and option activity, the 270 strike here. So going into the trade, we're thinking, okay, if we hit our strike here, that's going to be a good profit on the put debit spread, but can we make the trade better? So what we'll typically do is, could we turn this into a butterfly, or better yet, could we make it into maybe a long put Condor where we could capture back our debit costs and make it into a free trade? So trade 1, we did just a put debit spread, the 273 put 270. So nice setup, really. $65 is maximum risk debit paid. Spread width 300 minus your costs. So potentially, if this was to close at your spread short strike or below, you make $235, 361% return. But the problem with shorting this market, the markets just don't stay down. So what we typically will do is, if you hit our target, we'll take profit. We'll take some profit there on part of the trade. So in this example, it hit down to the target. You take part of the trade, the profit there, $98 on the risk of 65. So that's 150% return, not bad. But we're looking 1 or 2 steps ahead. So when it hit down there to that 270 area, we were able to sell the 268 short put, buy the 265 below it. That's a bull put credit spread, brought in $65 credit, all right? And that offset the debit cost. So now we just turn this into a free trade. So you can see down below here, it's got the original put debit spread was $65. And when it flushed down here to that 270 area, the bull put credit spread was going for 65 cents. So now we've offset that, and now there's 0 risk in the trade. We can sit back and see what's going to happen into expiration if we want. All right, so here's what it just did. It adjusted this to the long put Condor. All right, so original trade, long the put here, short a put, and then short of the put here, long a put. So we've got this structure, and now we've offset and brought back that 65 debit cost by the credit spread, 0 risk. Now, if it's to go out, if it goes out between the 2 different spreads, this would make 300. Now it was going out here at, about 271.33, but a nice, see with the Condor, nice profit zone. So this was up $164 per spread on 0 risk. So it's a really, really fantastic way if you can just start thinking as a trader 1 or 2 moves ahead. So you can see here, trade one, not bad, $98 per spread, 150% return. But by doing that adjustment, that turned into 164, doubled almost the cost, doubled your profit, but your risk went to zero. So that's the really beauty of it. So if you'd like to learn, a lot more how to master these, really high reward, low risk strategies, hopefully I gave you enough here today that you could do it on your own. But if you'd really like to get some help and master this a lot sooner, I've got a great package for you. So if you'd like to sign up here, I've got this package. Let me give you the link. And this will give you the course that I did here in February. And this course is it was a 7-hour course on the butterfly and the long condor strategy. So got a lot of great bonuses here too. Let me give you the link here. Now everything, if you sign up here today, you'll get all the bonuses as well. And all this is yours forever. So you'll have the course, you'll get a login to access your course. And this course and all the bonuses will be yours forever. So let's go through everything here, and then if I have time, I can take questions. So with this package, you're going to get the Butterfly Long Condor Options Masters course that I did just recently. It's a 7+ hour course. It is broken down in modules of 30 minutes or less, kind of based on the chapters of the course. So you'll get that, and then you're going to get my new Options Beginners course. So these are the site. If you go to my website, this is what the course is going for on my website, $497. And then you're also going to get my Options Beginners course, and you're going to get for some additional support to your trading and to any questions you might have after you review the course. I'm going to give you a 30-day trial membership to my trading club, which gives you access to our virtual trading room. So that's $97 a month. And you could also do a year if you want to stay on $488. But this will be for the next 30 days. And if you want to start at a different time, just send us an email. We'll start your time whenever you want to. So you'll get that, and then you're going to get my one follow-up support Q&A. We'll send you a link to that, and this will be live and then recorded. And then you'll get my option trading tutorial, which is another option basic course with videos on the Greeks and probabilities. You'll get my option strategy manifesto and my power tool guide. So all that for $97. If you plug in and just use that link, you should be able to just click on it, and that should then pull up your payment link. And $97, you can use credit card or PayPal for that. Okay, and so again, all this will be yours to keep. And if you have any questions, send us an email, support@PowerCycle Trading. So let's go through what you'll get here on the bonuses. So first, you'll get the master's course here on the Butterfly Condor. And so 7-hour recorded course broken into 30-minute modules. It comes with my complete PowerPoint. My courses are very detailed with trading examples. So 456-page trading course manual there. So it's basically my blueprint course, step by step, on how to do butterflies and condors. So let's go through what's going to be in the course. Part one, I always like to go through the Greeks that are kind of important so you understand how they affect price for a butterfly condor, how theta decay impacts butterfly condor, volatility, the importance of that, and what we call volatility crash, and how that affects the butterfly condor. Really important to understand option pricing, to understand and have the confidence of how these structures and trades work. So pricing the option, go through in that in great detail so you understand that. And then I'll take you through in this course how to use Fibonacci to map out your targets for profit targets or for defense targets. So if it hits a certain price point, you have to take defense. And with this course, it'll teach you how to hedge using the butterfly condor. So, and then we go through standard deviation, how to also use that for your profit targets. Now, part two, we go through then the core basics of the butterfly and condor. So many traders just don't understand how they work, but this will demystify all that. And then the great thing with the course, we go through every variation of a butterfly. So, and then how, why, and when would you use long call or put butterfly, wide wing butterfly, broken wing butterfly, ratio butterfly, a broken wing ratio, butterfly, iron butterfly, vacation, long condor. So the course takes you through every one of these different variations with the trade examples of, when, how, and why to use it in that situation. And then it's, what's the best time frame? Should you go out, 1 week, 2 weeks, a month? And how do you get those 10-to-1 or higher structures? How does volatility collapse work and affect this? And then there's part of the course that goes through using these for pinning, monthly option expiration pinning, which is a lot of fun and a great way to kind of add a additional stream of income. So the course shows you how to actually target and pick targets for these type of expiration trades. And then we go through the long condor. A big part of the course is strictly set out for that, the long condor trade, how that works. Now this is different from an iron condor, so you'll learn the difference. And then how, why, and when would you use the long option condor. And then a big part or section of the course is dedicated to hedging. So take you through the progressions of hedging, and then how to use the butterfly long condor hedge to hedge any of your core positions, or specifically to maybe defend vertical debit spreads or credit spreads. So if you're doing vertical credit spreads and you've been getting beaten up because it hits your short strike, this is a great place for you to go. And then a step-by-step checklist to go through of how to set these up, execution and management of the trade, and then you get a resource area, assignment risk, expiration, auto exercise, what that is and how that impacts your trade and what to look for and how to avoid it. And then you'll get a trading library as well. So a really fantastic course. Just a little feedback from the last go around. I've never seen anyone explain options like this. Excellent class, exactly what I was looking for. No one has ever done anything like this for me before. Wish I'd have found you sooner, but I'm glad I found you now. This from Dave, he said, best money and time I've ever spent. Excellent. You have such a great knack of explaining all the special things one should know to trade these strategies. Thanks so much, David. And then Rick said, this is really true. See, these chess trading moves you go over in detail, never get old. So your bonuses real quick before I run out of time, you'll get my option trading for beginners, a brand new course there. So if you're starting out, you'll add that to your library, the benefits of options, puts and calls, expiration, how all that works. And then bonus 2, you'll get a trial membership, 30 days to my trading club. Now, again, you can start it if you want to start it a week out, 2 weeks, whatever, just send us an email. We'll start it when you want. But this gives you access to our virtual trading room every morning, 9:30 to 10:30 during the week, and then back for the close every Monday, Wednesday, Thursday. I do a daily video market update every night after the close. You get that. Trading videos are archived. Then we do a weekly Q&A every Tuesday, live and recorded. Traders Education Vault, a lot of great trading information and material, and you get 60% off on anything on my website, all courses and trading software. Got a lot of trading software, so all that as a member, you get 60% off on that. Bonus 1, live follow-up Q&A. We'll send you a link probably next week. That'll probably be a week, 2 weeks out. Give yourself time to go through the course. We'll give you a link for that. That'll be recorded, but you're going to get the trading club, which gives you the trading room. So that's additional support for you to come in, ask questions on anything in the course or any trades that you're having a problem with, or see the trades that we're setting up. So really great advantage or benefit there. And then you get my option tutorials, so another basic option course, 60-page course with videos on the Greeks, option pricing, standard deviation, probabilities. And then my 15 option strategy guide, another nice benefit here, goes through trade construction, when to use such a trade back ratio spreads, straddles, strangles, and then option guide for the Greeks. So you can print this out, put on your desk. So it's a really great kind of package, just really focusing in and dedicated to options. So that's pretty much covers everything. And there's the link again. And hopefully you'll take advantage of it. For 97 bucks, you can't go wrong, and you're going to learn a tremendous amount of just things in general that you need to know for options, but especially if you want to try to start incorporating these into your trading. So I have about 1 minute left, but hopefully this covers everything, and I appreciate everybody being here today, and I hope to see you in future events that I do. So again, thank you very much, everybody.
All right, everybody, let's get going. Let's go make some money. So what I want to do today is I want to give you a complete tutorial on how to use 2 related techniques for day and swing trading. Okay, I'm going to give you all the rules, everything you're going to need in order to trade this technique. And it's one of my core techniques that I use every single day for myself. The other thing is, at the very end of this presentation, I have a free gift for you, which doesn't mean anything to you right now, but by the time we get to the end, you're going to say, okay, I want that gift. All right, let's get going. First, a little bit of background about me, just so you know who I am. There I am in, I think, Malaysia, somewhere, Thailand, whatever. So basically, I manage the #1 mutual fund in the United States. I manage the #1 global macro hedge fund in the world. I wrote the #1 stock newsletter in the US. I've been on the cover of magazines, written 10 books on trading, been on TV over 1,000 times, most sought after investment trainer in the world. There I am in front of 4,500 people. There's another different speech for 4,500 people. But the most important thing is I really trade every single day, every single day. This is how I make my living, is trading. And I've been doing it for 50 years, haven't had a losing year yet, continue to keep pounding on it every day because I love to trade and I love to make money. But there's one thing more important than me really trading, and that is that I help people learn how to be financially free. And I want to do that today. That's my business mission, is to help people become financially free and change their lives. So let's dive right in. The technique that I want to talk about is called a reversal bar. And then I'm going to add to it in a couple of minutes and take it to another level. So I'm going to look at a daily bar or a daily candle. It doesn't matter. But the definition is, and please write this down so there's no confusion later, all right? What you want to do is you want to look and find a daily bar or candle that makes a lower low than yesterday's low, but closes higher than yesterday's close, and that's called a bullish reversal bar. A bearish reversal bar makes a higher high than yesterday's high, but closes lower than yesterday's close. Let's take a look at some examples of this. So here's a million of them. What are we looking at? I don't even know what instrument this is. It doesn't matter. Let's take a look at this one right here. It made a higher high than yesterday's high, but closed lower than yesterday's close. So this would be a bearish reversal bar. Right next to it, here's a bullish reversal bar. We made a lower low than yesterday's low, but we closed higher on the day. So that is an example of a bullish reversal bar. Here's another reversal bar. It made a lower low than yesterday, but closed higher. Here's another bearish reversal bar right here. Made a higher high than yesterday, but closed lower. Now, let's take a look at just a day that's not a reversal bar. Here it is right here. It closed higher, but it didn't make a lower low first. So this is not a reversal bar. Not a reversal bar. We never made a higher high and closed lower. So you're looking, and let me explain why this technique works so great. And we'll get to the exact rules here in just a minute. What happens is this. Let's take a look at this bearish reversal bar right here. So what's happened is the market has opened higher. It ran up a little bit. So everybody's excited about the long side. We've been in a bull move. We went a little sideways. Now all of a sudden it looks like we're going to take off and the bull market is going to continue. And then all of a sudden something happens right here. Now we don't know what it is. Could be a news item. Could be somebody just sold a hell of a lot of it. We don't know why it caused it, but after the initial bullish enthusiasm of the day, the market reverses. The bears come in force and slap the market down. So it plunges from there and closes lower on the day. Let's take a bullish one. This market, it plunges down. It's a huge, big bar, lots of movement. It moves down. It continues a little bit lower the next day, and then something happens right at this point, and the market reverses and starts to go back up again. So it's almost like the market is going in one direction, and then something big happens. Something so big that the daily trend reverses and goes the other direction. The market plunges in this case. I mean, that's a huge bar. Plunges in this case, makes a lower low the next day. I mean, look, it actually opens up higher, then makes a lower low, and then turns around and goes all the way back up and closes higher. So something big is happening in the market. We don't know what it is. Maybe we know, maybe there's a news item and you can find the news item. But the main point is there's a big change in sentiment, a big change in momentum, a big change in direction. And we can see it by looking for reversal bars. Okay, now let's go on. Now you can, what I want you to do is, I just showed up a bunch of them, but what I'm going to now do is, let's see. Okay, so let me tell you how you trade it. Let me tell you what the rules are. And I'm a big believer in rule-driven trading. And a big reason for that is because I can go back and back test it. The rules that I give you, you'll be able to go back when this presentation is over and you'll be able to back test it and see if it works. Because I don't want you to believe me, I want you to believe your eyes. I want you to believe your intellect. I want you to believe in yourself, not me. I've been doing this for 50 years, so trust me, I know a lot of techniques. I've used a lot of techniques. A lot of them don't work, but I don't trade those anymore. I only trade techniques that have worked for me for decades, all right? But just because I tell you that it works, you have to look and see yourself. And by going through, you know, go look at your charts, go back a year on 10 instruments and see whether or not this technique works or doesn't work, okay? Because then you've got no excuse for not making money. If you see that it made money over 10 instruments over 1 year, that's 10 years of back testing. You know this thing is working or not working. You'll see with your own eyes that this is a powerful technique. Okay, so what do? What is the technique? I call it a day or swing trade because the trades are really 1 day long. So let's take this bearish one right here. The market opens up, moves up a little bit, and then plunges lower. So we enter market on close. Now, if you're trading if you're trading stocks, great, market on close. Futures, market on close. Forex, I do it at midnight GMT. Midnight GMT, I consider the close of the day, so I will sell short at midnight GMT. So now I'm short. Where do I put a stop loss? Because we always have to control risk whenever we put on any trade. So the stop loss is, in this case, just above the high of the day. Depending on the instrument, I use a buffer. So for stocks, it's got to be 10 cents above the high. Foreign exchange, 3 pips above the high. For futures, I use the bid-ask spread. Whatever the bid-ask spread is above the high, that's my stop loss up here. So I get short here. There's my stop loss up here. And the basic rule, which you can now backtest, is I get out market on close the next day. So get in market on close, get out market on close. So in this case, a small winning trade, no big deal. Same thing over here. Reversal bar up, we buy market on close. It closes up a little the next day, fine, okay. Let's say, I mean, we can just go through all of these. I mean, here's a reversal bar, we get out the next day, that's a moderate profit. Here's one here, that's like 0 profit. Let's see, no, we didn't do this one. Okay, here's a losing trade. So we go short here and we get out here. We don't get stopped out because the stop is up here. We get out here, so that's a losing trade right there. We get in here, market on close, we get out the next day, nice profit. Get short on this one, get out the next day, nice profit. Here's one we get, I don't know, I put down that this is 1, but boy, that sure looks the same. But let's just say it is. Buy it here, we get out here, that's a loser. But the next day we come right back in, we sell here, we buy here. That basically pays for the loss we had the day before. Here's another losing trade, buy here, get out here, that's a loser. Buy here, get out here, that's a winner. Sell here, get out here, that's a winner. Look at this huge reversal bar. Sell here, get out here, that's a winner. Buy here, get out here, that's a small winner. Sell here, get out here, another winner. Get out, buy here, get out here, another. That's a pretty nice winner, that's for sure. And then finally over here, a loser. 77% of your trades are going to be winners. 77% of your trades are going to be winners. And you'll notice that in all of these trades, I don't know how many there are here, 15 or something like that, we actually were never stopped out at all. It's actually very rare to be stopped out. Very rare. I mean, here's 15 trades we were never stopped out. And if you go back a year, you might only get stopped out once or twice. So the stop loss is really a disaster stop loss. Now, I use a rule in risk management, and I'm a fanatic about risk management, but I basically say that let me find one of the losing trades. Okay, where was the losing trade? Where's the losing trade? Come on. Okay, right here. So here's my stop loss. I'm selling here, and I say that I'm willing to risk 1% of my equity. So if I get stopped out in this trade, I'm going to lose 1% of my equity. But in actual fact, I get out here, so I only lose about 0.5%. Only when I get stopped out does the worst case scenario occur, because as I say, it's very, very rare to be stopped out. Very rare to be stopped out. Okay. Trader asks, why are you using 2016 charts? Because it takes time to put these stupid little arrows on there, so it doesn't matter. Pick any instrument you have. Doesn't matter. That's why. I'm lazy. I didn't want to redo the chart. Do you only use this technique for shorting? No, I use it. Look, here's a long trade right here. Here's a long trade right here. Here's a long trade here. All the upward pointing arrows are bullish trades. All the downward pointing are bearish trades. So go otherwise. Member says your stops are very big. It depends on how big your position is. As I say, all trades, I use 1%. I'm going to lose 1% of my equity. So in this trade, the market goes down here, I'd lose 1%. On this trade here, if it goes up here, I lose 1%. But this bar is much bigger. So what does it mean? It means I have a smaller position here than I have here. That's all. The risks are actually all exactly the same. So now ask the question, what time frame do you use for day trading futures? Well, I spent literally years as a full-time day trader. That's really when I worked for several big institutions. I worked for one of the largest banks in the world, a French bank, and that was mainly a day trading job and dealing job. And basically, I would start with a daily analysis using techniques like this. So now, for example, if I see a big reversal bar down, on this day, I want to be day trading from the short side, because the odds are very dramatically increased. If I see a reversal bar, I pretty much know 77% of the time which way the market's going to go on the close. So that's a huge advantage for day trading. What I would normally do is look at the hourly charts, and then if I got close to a trade, maybe I'd go down to 15 minutes. But I don't do ones, I don't do fives, because those bars don't mean anything. No, it doesn't take any volume to create a 5-minute bar. It works. Andrew asked the question. It works exactly the same on candlesticks. Exactly, no difference. Member says your stops are very big compared to your gains. Actually not. If you actually go do the math, you'll find out that that's not the case. And remember, it's not the size of the stop, it's the size of your position in relationship to the stop. That's the key. So as I say, if I have a small position and the stop is wide, I lose very little money. That's what you have to look at. You have to have a coherent risk management technique. So I use a technique called fixed fractional, and we teach it in our courses because it's the best form of risk management that balances risk and reward. So when you have a huge bar, you have a very small position on. When you have a small bar, you put on a bigger position. So the risk on every one of these bars, no matter how big the bar is, when I trade it, the risk is always exactly the same, exactly the same. Okay, let's carry on. Now, so you can go back test it and go ahead, but don't just sit there and say, well, I'm going to buy 100 shares or say I'm going to buy one standard lot. That's not good risk management, because now every trade is exactly the same, but every trade should not have the same size. And that's where a lot of traders get into trouble, is they always trade one standard lot or 100 shares or whatever it is. But no, you have to look at the dollar risk in the trade and adjust the size of your position. So go ahead and amaze yourself and back test it. As I say, 77% of your trades are going to be winners. That gives you a big edge in the market. Okay, the other thing is, of course, is that this type of trading can be very low investment. Foreign exchange, obviously, because of the leverage, you don't need very much money. Futures tend to not be a low investment, not because the margin is high, the margin is very low, but the risk, you're often going to be risking $1,000 on a trade, but options on futures are very small risk, a low investment, I should say. And then I usually use options instead of stocks, because of course buying 100 shares of something could be, $5,000, $10,000, whereas the option might be $300. So you want to be using as low investment as possible. If you use correct money management, that's a big if, then you can make a tremendous amount of money and you can keep your risk very low. All right, let's take this further. Let me show you an even better technique. And then I'm going to give you some final rules as well. So the next one I want to talk about is a key reversal. So I showed you what a reversal bar is. What is a key reversal? This is a type of reversal bar, but it has one additional element. Some people believe that the formation I'm about to show you is the most powerful formation there is. There's no other more powerful formation. So what is a key reversal? It's a daily bar that makes a lower low than yesterday's low, but closes higher than yesterday's close. Hold it. Or it makes a higher high than yesterday, but closes lower than yesterday's close. Now that's exactly the same as a reversal bar. That's exactly the same as a reversal bar. And here's the new criteria. And the whole bar is outside the range of the previous day. So it is a reversal bar combined with an outside day. An outside day is any bar or candle where the high is higher than yesterday's high and the low is lower than yesterday's low. So it's an outside day combined with a reversal bar. This, many people believe, is the most powerful day formation there is. So let's find some examples. Okay, over here. Here's an outside day. You can see it made a lower low, closed higher, so it's a reversal bar, but the low is lower than yesterday's low, and the high is higher than yesterday's high. Once again, we buy on the close, we sell the next day, profitable trade. Same thing here. Here's a key reversal. Reversal bar makes a lower low than yesterday, closes higher, but the high is higher than yesterday's high and the low is below yesterday's low. Now, in all of my examples, I always want to have a losing trade. I don't want anybody to think that this technique is perfect, because it's not. So in this case, we'd buy here, we'd have a small loss. Over here, another reversal, a key reversal, and a small winner. Okay, and there's no other key reversals on this chart. So this is a very, very powerful technique. You're going to trade it basically the same. There are additional rules and additional ways to make money from key reversals, which I don't really have time to go into today. But you're always going to be looking for these big range days. Now, why are outside days so powerful? Because it takes a lot of money to move a price all this distance. It doesn't take a lot of money to go from the high to the low or the low to the high over here. usually, but it usually takes a lot of money over here. In addition, remember the market's going down. So the market, you can see here, it gaps down, goes down a little bit, and then for whatever reason, tremendous amounts of buying comes in. So it has to absorb the selling that's going on, and the buying has to take control of the market. And there it goes, right back up again, and we get a winning trade. Now, reversal bars, as you saw in the previous chart, they happen pretty frequently. And if you're trading something like Forex, you know, the pairs are pretty highly correlated, so you might have 2 or 3 on one day. You probably only want to take one of them if they're highly correlated. So for example, Euro US and US Swiss are highly correlated. So if you get a reversal bar or a key reversal, just pick one of them. Otherwise, you're doubling your risk. In stocks, same thing. If you get a reversal bar or a key reversal in General Motors, you're probably going to get one in Ford. Just do it in one of them. All right. So this is what a key reversal is. Now, let's take a look at some other ones here. Here's Apple, key reversal. That one ends up being a loser. This one's a winner. This one's a winner. These two winners are not much at all. Let's go over here. Okay, gold. It works in all instruments, Key reversal, basically a break-even trade. Key reversal, a monster winner. This is a monster winner. And then we come back with another modest winner. So Canal asks a question. This is a good question. How do you execute on close since you have to wait for the daily candle to close prior to entering the trade? So let's take a look at this bar right here, okay? You can put the order in as soon as it breaks to a new high, because in this case, we made a new low. As soon as it breaks to a new high, we know that it's an outside day. We know that right at that moment. So now you can put in an order to buy. Now follow me very closely. We put in an order to buy. We're watching the market. We see right here. We wait until it breaks this high, and then we put in an order to buy, you know, 1 contract of gold at this price, at yesterday's high. Stop, close only. Stop, close only. So what that means is it will be a market order on close if the price is still above yesterday's high. A stop close only is how you do it during the day, so you don't have to wait for the close. And let's face it, if you're in a situation like this, you know it's 10 minutes before the close, you know it's going to close higher, so you can just put in a market order. All of these are that case. The only case that gets a little tricky is in foreign exchange, because it opens and closes at the same price, and where was it yesterday? So, and it might be at an inconvenient time in the middle of the night, depending on where you are in the world. But stop close only order will work for futures, stocks, and depending on your Forex broker, it can work for Forex as well. All right, so it actually is pretty easy. Okay, let's take a look over here. Here's the losing trade that I want to show you. Here's a break-even trade. That's unusual, but then we're following up by a nice big winner here. That's okay. Now let me go back for just a second. So let me give you some nuances here. When we have a key reversal day, day traders, pay close attention. When we have a key reversal day, there's a 95% chance that the price will break the high of the day the next day. 95%. Go back, back test it. See if what I'm telling you is true or not. Key reversal breaks the high of the key reversal day the next day, 95% of the time. Key reversal bar the next day, even though we're down here, it breaks the high of the day 95% of the time. So what I'm describing is get in on the close, get out on the close, which means you don't have to stare at the screen all day. But if you're a day trader, you can buy on the close, and you know 95% of the time you're going to get to this price. you can take a small profit. Now, in this is in gold, so I think this is about $1 profit. So in futures, that'd be $100, okay? Depending on your CFD broker, if you're overseas, who knows what it'll be, depending on the size of the contract, and et cetera, et cetera. But this is a very powerful technique. Even if the trade is a loser, you end up making money on the day trade. Get in here, get out at the high of the day, winning trade. Sell here, very small winning trade, but you end up with a winning trade. You're going to go maybe a year and not even have a losing trade if you use this day trade concept using key reversals. 95% of the time it breaks the high or the low. In the case of a bearish key reversal, it breaks the low. In the case of a bullish key reversal, it breaks the high. There's not many techniques where you can make money 95% of the time. Now, the trades are not big trades. You're not making big money because you're just trying to get from the close to the low or the close to the high. So these are, pretty modest winners. But you can make a living doing that, okay? If I can have 95% winners and I'm trading multiple instruments, so for me personally, I trade stocks, futures, Forex, CFDs. I trade anything, anywhere, anytime. It doesn't matter. And I've been doing that for 40 years. So to me, I'm going to have a key reversal pretty much every day in something. So 95% of the time, I'm going to have a winning trade. So if I say that there's 220 days in the year, I might have 2 losing trades in a year. I mean, really, it's pretty insane. So day traders should be paying high attention. We also know that with a key reversal, you have a very high propensity of having a winning trade if I hold it to the end of the day. But I know I've got a 95% winning ratio at the end of just from the close to the high or the low. That's a huge advantage. Now, once again, don't believe me, go test it yourself. Go test it yourself. I don't want you to believe anything I say. I want you to take what I'm saying and I want you to back test it and see if it's true or not. If it's true, you've got to trade it. Okay, you've got to trade it. And that's what I want you to do, because if you trade it, you'll make money. If you have proper risk management and you have some discipline, the technique makes money is what I should say. So if you follow the technique exactly, you'll make money. Okay, let's carry on. So what we see here is that this concept, the whole concept of reversal bars and key reversal bars, is that we're seeing something big enter the market. The market traded down here. Something big came in and powered the market all the way up here. So what it is a mini trend change indicator also. And the mini trend change usually carries on for some period of time. Sometimes it's only one day long. In this case, we got a total of 3 up days in a row. So this mini trend change carried for 3 days, all right? Over here, really only carried on for 1 day. But even here, the 95% trade was a profitable trade. It broke above yesterday's high, the key reversal bar high. Any questions on that? I want to make sure I'm saying this clearly, because we're getting highs and lows and reversals and selling and buying. So I just want to make sure everybody's on the same page here. Okay, so I consider this to be first a swing trade that can be used also for day trading. So it's really short-term trading. Doesn't really help you if you're a position trade. The key always is risk management, making sure that you're controlling risk, and then controlling risk more. Now, I'm a big fan of day and swing trading, but I hate staring at a screen all day long. Okay, hang on one second. Do you use other indicators or chart patterns in addition to reversal bars? I use many of them, many. In fact, I haven't even told you all the rules of how to make money from these 2 techniques, okay? There's other things. I have a technique called the MUT technique. Once again, about 90% accurate, and the expected value of that technique is astronomical, but that's another variation kind of a layer on top of this one. This one technique that I'm showing you, reversal bars and key reversals, there's many ways that you can adapt this and make more money from it. Many more ways. So I like to day trade and swing trade. And as I say, I really was a position trader until 1980. And then I started doing lots of day and swing trading because I was working for big institutions on Wall Street as a trader or head of derivatives or treasurer, these kind of things where I was controlling money, the house's money, okay? So they're very keen to make sure I'm making money. And I did that for years, so obviously I made money or they would have fired me. But when you work for big trading houses, their whole attitude is, what'd you do for me today? And you have to, the pressure is on every single day when you work for those big trading operations. I was given money by a lot of famous people. So I got money to trade from Goldman Sachs. They gave me money. I made them money year after year. Didn't ever work for Goldman Sachs. They just gave me their proprietary money and I traded it for them. Vim Quaker, a billionaire hedge fund manager, gave me money. Commodities Corp gave me money. I mean, lots of people that you've known have given me money because I make people money. That's what I do for a living. So all right, so let's carry on. So the disadvantage of day trading, of course, is you have to stare at a screen all day. The techniques that I'm showing you here, you do not have to do that. If you use the 95% rule, you're going to have to stare at a screen for a short period of time. Although even there, you could just put in an order to sell, a target at yesterday's high. So even there, you can cut down the time. So what I developed over time is more and more techniques for day trading where I only have to look at the market maybe for 1 minute once per hour, because most of my day trading is keyed off of hourly charts, not 1 minute or 5 minute. I want to catch the biggest moves during the day, And I also filter out days that I don't want to trade. So, sometimes a market gets into a narrow range, hard to make money. Well, why work hard? Why don't you just trade when the market's moving? So I only trade aggressive, volatile markets because that's where the big money's made in day trading. Another thing is you always want to have as many instruments as possible that you can trade, liquid instruments. So I have a list of 20 stocks. I call them the swingers. Why? Because the price swings all over the place. So it's going to be the ones that you can imagine, Facebook or Google, that kind of company. I trade 8 major pairs in foreign exchange, and I trade about 15 futures contracts because those are the most liquid and are moving a lot. And then I try to talk myself out of trades. I want to end up with trades that are making me money all the time. So I actually try to create as many filters as possible so that I don't trade as often as I could, okay? So that's what I do. So let's carry on. Okay, do you like this? Put in the question box if you like this, if this is making sense to you. If you think you can, if you look at this and you say, yeah, I think I can make money with this. Give me a yes in the question box here if you could, please. Great stuff, says EO. All right, good. Trader says yes. Talbot, yes. Excellent. Andrew, yes. All right. Trader, back again. You are an excellent teacher. Well, thank you very much, Trader. Yes. Giddy up, says Ted. All right, awesome. All right. Okay, so Trader says if I can figure this out. All right, once again, we only have a few minutes on these presentations, so I always try to make it as simple as possible, but you never know. But hang on, Trader, because I have a free gift for you, okay, which will explain it all. So let me tell you about something. In the, there we go. What I've done is, as I say, I love to day trade. I love to swing trade, all of this stuff. So I put together a course called My Favorite Day Trading System. And I just didn't teach it to you, but it plays a role. Let me explain it. It's a video course. It's on-demand videos. These are bite-sized videos, full screen them, super easy, 10, 12-minute long videos. Downloads, we have worksheets, mind maps, and everything. Once again, to make this super simple for you, every single technique that I teach in this course is a technique I use every single day. And when you sign up for this course, you get instant access. So what are you going to learn? You're going to learn the single most important factor for day trading success. The single most that people nearly always forget, yet it's what separates the most successful traders. And let me mention to you, Marty Schwartz has the best audited track record of any trader ever, 1,000% a year, audited for 7 straight years. He hired me to help him trade, and he's a day trader. Michael Marcus, another one of the market wizards, he turned 30,000 into 80 million. He hired me. I worked for both of these gentlemen for 18 months each because they hired me to coach them, okay? So when great traders are hiring me, I would have worked for both of them for free because they're great traders and I could learn stuff from them, and I did. And in this course, I'm going to pass on a lot of what I learned from these two great traders. How to make a ton of money with taking only an ounce of risk. I mentioned this in my presentation because the key is how we only have 2 decisions to make. What are we going to do, buy or sell? And the second one, which people usually forget, is how big of a position do I put on? So in this course, I'm going to teach you the technique that I use to determine the size of the position so that I only take teeny tiny risk. I don't like taking risk. I'm a professional trader. I make money trading. So I need to make sure that my capital is always protected because capital preservation is more important than capital appreciation. And my capital is my business. How much money I make is determined by my capital. So I can't put it at a lot of risk. I just got to be tight with it. So I'm going to teach you in this course how to make a ton of money with only taking an ounce of risk. I'm going to tell you how to jump on the back of either the bulls or the bears to make money. This is a basic principle that I use. And the basic principle is I never try to be smart when I trade. I don't try to be dumb, but I don't try to be smart. The money is made when you do what the market tells you to do, period. So the whole essence of everything I teach is to say, market, what do you want me to do? Do you want me to buy or sell? And the market will tell you exactly what it wants to do. It's very simple. So you have to get your ego out of it. You've got to be humble as can be, and then just do what the market tells you to do. So that's why I jump on the back of either the bulls or the bears. I don't care which direction I'm going. I'm going to teach you some quote unquote insider secrets to creating profitable trades. Remember, I was a market maker for many, many years, so I know what the market makers are thinking and what they're doing. I'm going to talk about the key to predicting sharply moving markets because that's where the big money is made. You don't want to be day trading or swing trading dull markets. That means you're kind of stuck. It's boring. What I learned in the early 70s to make money day trading that still works today. I started in this business in 1971, but there are immutable principles that drive profitable trading, and they've been around for a century or more. I learned it in the 1970s. I'm going to pass it on to you. How to make a day's worth of profits only working 2 minutes per hour. Once again, I don't want to stare at a screen. I'd rather play video games. So to me, I want to just work as few hours as possible, but get the benefits of day trading, of not having a position overnight, and so on and so forth. How to strip down all the potential daily trades to just the must-do trades. So if you're confronted with 2 trades, which one should you do? Well, there's a method for figuring out. You want to do the best trade. You don't want to do every trade. You want to do the best trades. If you're presented with 20 trades, you probably only want to do 5 of those. So what are the must-do trades? I'm going to show you how to do that. So the course, we've been selling it for $9.97, but this week to my list, not you guys, but to my list, my fans, the people that buy all my courses, we're reducing it to only $3.97. So that's 60% off, or $600 less than it normally is. But if you're on this call right now, then we're reducing it down to $197. That's 80% off, and it's less than I'm selling it to all my fans that are on my list. So you can't tell them about this deal. You got that? This is just between you and I. But I want to introduce the quality of what we do at a really a nominal price for what you get. You'll make this back probably in the first day or 2. So it's incredibly cheap. It's incredible. You get instant access. You can get it right away and start on it today. So go to wealthbuilderllc.com/fave or text or call 702-715-8588, and that's in the US, so +1 if you're overseas. But this is wealthbuilderllc.com/fave, and the course I'll be teaching you my favorite day trading technique. Key reversal bars and reversal bars are part of that technique, but this course covers far more than that. In this course, we call a day like reversal bars a special day, and it changes how we trade that instrument for that day. And I give you the exact rules on what I do. Now, I promised you a free gift. I'm going to give you a copy of all these slides so you can go back through them all you want. All you have to do is text REVBAR, all capitals, to 44222, and I'll send you a copy of my slides automatically. You'll get it automatically. I think they just want your email address, and then you'll get a copy of my slides so that you can review them and learn reversal bars and key reversal bars even better. So super simple. It's automatic. We're not going to talk to you at all. It just gets sent to you. The course, you really want to claim your seat right now at this super cheap price. All right, everybody. Any other questions here before we go? Let me scan through here. Is your course use recent examples? Yes. I think they're a month old or something like that. That's all. Any other questions? All right, awesome. Anna, I think we're all through here, and I can turn it back over to you.
Hi, everybody, and thanks so much for being here. I am very excited to present for you guys. Thank you so much. Okay, so I am going to jump right in, but I do want to just say a really quick thing that I am here to help you guys. And the more questions you guys throw my way, the better it will be for everybody. So I will definitely answer all of your questions. I'm here for that. I will be going through my presentation. However, when you have a question pop up during the presentation, just let me know, okay? The more interaction we have, the more you guys will learn. All right, so let's jump in. I am Marina, the Trader Chick, and that is me right over here. And what I want to cover in today's presentation is, even though we know quite a lot of different strategies and we might follow all these different people, it's amazing how literally just going back to the basics and actually understanding some of the most basic things in anything we do in life will actually elevate us to the next level. And today I actually want to do that because it's surprising, and I've noticed in my own journey of trading and spending over $20,000 on my education, I never actually was taught the basics, or nobody actually talks about the basics. And after I lost almost 2 accounts, it was horrible. That's when I decided to either, I was literally at a breaking point where I had to quit, or I had to take time off, and then I came back. And when I did finally come back, I recognized that my main problem was I never actually really learned the basics. And once I got that, I can guarantee you right now that once you get some of the basics, which I think a lot of us are overlooking, I promise that your game, your day trading, everything will completely be elevated and taken to the next level. Completely. So that's what I want to talk about today. I want to talk about day trading versus investing, because if you're going to be looking for a trade that's going to be 1 day long, you cannot be looking at a chart that's 1 minute, right? So it's really difficult to do well if you're not even in the right time zone, time frame, especially if you're investing. It is so very different than day trading, right? When I tell people I'm a day trader, they're like, oh, I want to learn how to invest, but I always like, well, I day trade to invest. They're super different. I want to bust some of the myths of day trading, because myths of day trading is literally limiting beliefs. And what happens with limiting beliefs is that they're the ones that limit us. And once we can bust that, all of a sudden a whole new world will open up to us. What to trade, basic day trading lingos, understanding brokers, commissions, and platforms, which a lot of people miss, and they end up being with a wrong broker. and spending way too much money on commissions, understanding market movements, patterns, indicators, and just simplifying your day trading overall. So that's what I really want to talk about today, and really will be able to help with all of this. Okay, so before I go anywhere, I want to do a quick intro and a fun fact. I am Marina, the Trader Chick. I am actually an expat mom. I live in Antigua, Guatemala. I am an expat living here. So another really thing that I want to bring up is that I'm trilingual, not because like, oh wow, that's so cool, she's trilingual. No, the reason why I bring it up is because being trilingual, I think, helped me realize that the market actually is a language of its own. A lot of people don't realize that, and they look at it from mathematical terms, all these really complicated ways, but really what it is, it's a language and it speaks to you. And when we start to understand the market, all of a sudden we're able to fully read it and work with it rather than try to predict it or beat the market and do all these things that don't actually work for us, right? So I actually was born in the Soviet Union. I do speak Russian completely fluently, and I learned English when I was 6. So when you're tiny, you don't really actually learn a language, it just kind of happens. However, I've been living in Central America now for almost 20 years, so I speak Spanish fluently, and I was able to learn Spanish in my later years. And as everybody who has learned a new language in their later years, we all know that it's a process, right? It takes time to translate each word in our head, get it out, then come back, all that. And it's kind of the same thing with when you read the market. And that's what I wanted for you to understand, that once you pass that process of the translations, you're just going to wake up one day and you're just going to get it. And that's what happened to me with Spanish and understanding the market. And I want to talk a lot about that today. And that all happens through the basics. When you learn a new language, it boils down to the basics. Another thing is, I was a fitness instructor and a travel writer before I became a day trader. I think a lot of people get really turned off or fearful or believe that they can't do it unless they have a financial background, have worked with brokers, have worked on Wall Street and corporate. That is so untrue, right? As a matter of fact, the least of that complicated stuff you bring into your day trading, the easier and the simpler it's actually going to be for you. So I just wanted to let you know that anybody can do this. This is my travel site. So as you can see, I am not only a day trader, because if you start to only be that thing, it can consume you in very negative ways. We are wholesome people, and living wholesome lives and bringing that to our trading is what's going to make us better traders. So before I jump in, I actually have this entire presentation and a lot more completely for free for you. You can download it right here and actually go back with it. Go back, and Anna just said that she's going to have all the replays, so you could go and review it at your own time as well. You could go and get it right here at makingofaDayTrader.com. 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 And you could get that all here for free. I recommend just go and getting it, and then you could review it at your own time. And it's literally something that I use for my own trading. So let's begin. Let's get into the basics, guys. Let's really break this down. What in the world is day trading, and why is it not investing? Oops, hang on a second. Okay, so unlike investing, day trading, we do not want to diversify, right? It's too much for us to be able to master one instrument. Why do people believe that if they start to look at many different markets, they will get better? When you hear people saying that they trade different markets, ask them how long they've been doing it, because they've probably been doing it for 20 years and have already started with one at a time and grew incrementally. You do not want to diversify when you're first beginning. Imagine your child wanting to be wanting to learn how to play a music instrument and coming to you and saying, hey, I want to learn how to play a musical instrument. And you say to them, okay, cool, which one? And they're like, I want to play the piano, the drums, the guitar, and the flute. And you're like, but that's not possible. You need to focus on the one. We are exactly like that. When you're day trading, all of your attention, all of your resources, all of your energy goes into one. Let me tell you guys, if you are trading futures, you cannot do well in Forex at the same time. They are two incredibly different strategies. It's like literally learning the flute and trying to play the piano all at the same time. Not possible. One instrument, one. Start with one, master it, and then move on. That is the only way I can tell you right now you will make money. If you're going to be doing options, forex, crypto, stocks at the same time, it's never going to happen. Totally different strategies, impossible to master all at once. The other thing is investors, when you're investing in a company, you actually care about their fundamentals, about their money, if they're going to grow, if they're going to have new products. We do not care about that if you're day trading, because we don't care if the market is going up or down, right? Because we can make as much money going down as up. So we focus literally on the day. So if I'm going to be day trading Apple, I don't really care if they're coming out with an iPhone 13, because today they're not. Today I'm looking at what is happening technically today, right? And that is a huge difference than investing, even swing trading. Again, you need to see the difference, right? Swing trading is several days, so you're not going to be looking at the 1 minute chart if you're trading several days. You cannot work that. It's not possible. So it's really important. I want to bust some of the myths. We all keep on hearing that it's so risky, day trading is gambling. Well, if you get into a car and manage to somehow turn it on, have never been in a car before, don't know where the brakes and the accelerator or even how to put the clutch into first, chances are you're gonna, if you accidentally even manage to move it forward, you're gonna crash, right? So are you gonna come out saying, oh my God, driving is too risky? Chances are, before you get in the car, you need to take classes. You need to learn how. Amazingly enough, and unfortunately enough, with day trading, there is absolutely no barrier to entry. Anyone that has any kind of amount of money could just throw it into the market, end up losing it all, if not more, if they're in margin, and then come out saying it's too risky. It's not. You got to get a strategy. You have to have a plan. You need a stop loss. You need target profits. Okay? Really huge myth that's got to be busted. You cannot just go into the market and follow somebody else's advice. You need to understand why you're doing what you are doing. The other big myth is that you need $25,000 to start. No, that is a total myth. That is completely untrue. Any market today, you can pretty much start at much lower intervals. If you are not going to be doing a margin account for your equities, you could also start with a lot less and still day trade technically. So honestly, depending on your market, crypto, you can start with like 100, futures 500, forex also like 100, equities, you don't need a lot of money. These are all myths and keep people from going into the market correctly because they have these misconceptions. The other thing is what I mentioned earlier, to be a math whiz and financial background. On the contrary, I have yet to see somebody that has been in a financial corporate world for a long time actually being super successful. I'm seeing that the most successful day traders are the ones that really do not have any of that background. And it makes it that much easier for them to learn with a new open mind rather than bring in a lot of the stuff that they've brought from the financial background that doesn't really have much to do with day trading. Another thing is it's too stressful and chaotic. Sure, if you're sitting in front of this many charts and screens, who would not be stressed out? Who would not go completely bonkers? And this is the product of having way too many instruments going on at the same time. Why do you want to put yourself through that? I don't know how old you are, but I'm almost 50 years old. And this alone really freaks me out. And the older I get, the least stress I actually need in my life. I have one chart. I trade off of one chart. I have 2 indicators. That's it. No flashing lights, none of that. I do not need that. And that brings me to the other thing, excuse me, is the misconception that you need to buy all these different softwares, algorithms, and indicators. You need a platform. You cannot be a Formula One driver without a real car. You cannot get into a minivan and pretend you want to be a Formula One driver. So if you're going to be a day trader, you need a platform, right? However, those platforms, they all come, if it's a good platform, come with good indicators, drawing tools, everything you need. You do not need to buy new softwares, algorithms. They never work. It is a proven fact. The only people making money from them are the ones selling it because they're constantly needing to be updated. They're constantly needing this or that and charging you more and more. If you have a good software, a good platform, That's all you need. Okay, I use universal free indicators because the majority of the platforms come with like at least 100 different indicators. And if you can't find an indicator you need and need to go and buy one, you should revisit your strategy. It's not working. Research and the news. So this is something super important. I know a lot of people, and I was one of them, who are obsessed with watching CNBC, Marketplace, Kramer Show, all of those. It is nothing but hearing experts with their own agendas, pushing their own agendas, and it is not going to be helpful. As a matter of fact, it's going to make you more confused. It's going to make you more stressed out. There are very specific news, like when are the housing reports, when is the PMI report, when is FOMC. Those actually really affect the market. When Jeff Bezos gets a divorce and Amazon tanks for zero reason, is that really news? No, I call it telenovelas and melodramas. And if you're smart enough, you'll realize that those aren't real. So it's really important to understand that. And also the fact that there's buy on the rumor and sell on the news. Unfortunately, that is a real thing. And a lot of times we individual traders only hear the actual news, and by then it's already too late. And we get in and we actually are too late for the game. So stay away from news. Stay away from the melodramas and all of that other stuff. Okay, because it does not really matter or make a big difference in our world. Market research. Again, if you're going to be trading 10 different instruments, you're going to kill yourself. It is not sustainable to find out all the research on it. You're going to get up at 4 in the morning, you're going to stay up until 5 like midnight. It will kill you. It is not sustainable. So that's why if you focus on one instrument, whatever it is, first of all, narrows down your market research by a gazillion, and it makes it much more enjoyable. So if anything, guys, hope you get is focus on one, master it, tell me, okay, I'm ready for the next one, and then move on. But until then, if you've got all these different instruments you're trying to trade, not making any money at all of that, this is your chance to understand the reason why. Another really big thing, guys, and this is a thing, and I had it, and I can bet all my money that whoever has gone live in the beginning has had this. Trigger happiness is a real thing. We believe, and it's a misconception, that day traders need to be in and out of trades all of the time. I used to sit for 2 or 3 hours and go through like 40 to 60 trades. Number one, commissions killed me. Number two, it's ridiculous. There are not that many good trades out there. So this is an analogy which I don't really like to use that much, but it's the best analogy I can use. Imagine a big game hunter. I do not condone hunting, but imagine a big game hunter. We traders are hunters. Okay, a big game hunter will not go out there and shoot any tiny little insect that crawls in front of them, or even a mole rat or a prairie dog. They wait for the big game. So I actually have this challenge that I do with my students, the 1 trade per day challenge. And it's amazing the amount of bad trades they filter out. 1 month, you just take one good trade. Yes, you could look at the others, but focus on the one. They said that it literally cut out 75% of the crappy trades they were taking. So it's an amazing thing, and I recommend everyone to do this. This is not a thing that we do, okay? This is a misconception, and it is a horrible one. Go for 1 to 3 trades per day, and that's all you need, because the most radical way to trade is conservatively. And being a conservative trader is sustainable. Aggressive never works. Never. It does not matter what field you're in, it doesn't work. And remember this, small profits daily bring you big profits yearly because it's sustainable. Again, sustainability and consistency is what we are looking for as traders. And I have a word for you guys, FOMO. I'm sure you've heard of FOMO, fear of missing out. I call it fear of missing a trade, which is this emotional baggage that traders bring to the table, thinking that if they're missing out on a trade and they start to chase it and run after it. Here's another thing, guys. There are thousands of good trades coming up all the time. It might not be today. It will definitely be there tomorrow. If you're going to chase a trade, be ready to lose the money on it, because that is an emotional entry, and you never want to be emotional when you trade. I know it's hard to understand, but if you have a very strong system and a very strong strategy, emotion really does not play as much as when you have no idea what you're looking for and just going in blindly. All right, what to trade? It's amazing the amount of times whenever I say I day trade, people are like, oh, I want to learn about stocks. Interestingly enough, at one point, stocks were only 25% of the market to trade. Today, they're like 20%, right? So let me just immediately bring this down to you. And there's going to be 5 markets that I'm talking about. So if you're trading, if you're intertrading amongst these 5 and not doing it well, that's because they are so different. Just because you're learning how to be a medical doctor does not mean that you could do optometry when you're learning to be a colon specialist, right? I mean, it's kind of ridiculous. But people don't understand that trading is the same thing. It's under the umbrella of financial markets, but they are so different. Forex, currencies, you're looking at different countries. You're not looking at the actual pairs. You're looking at the situations in the different countries paired together. And you could go to sleep, and Japan and Australia could have a bickering evening, and you wake up and your pair is completely demolished. Just so you understand, Forex is about countries and their diplomatic relations, and that's where the money, the currency really moves from. Okay, equities, stocks, there are over 6,000, maybe even 10,000 stocks out there. So if you're gonna go for equities, you gotta niche it down. First, decide on the sector, because if you're planning on doing tech, pharmacy, and entertainment, they're really different. So I really recommend zoning in on a sector, one sector. Choose tech, choose pharmacy, pharmaceuticals, choose one, but don't choose them all. It's not going to work. Or you could also go into big caps, small caps, penny stocks. Penny stocks are a very manipulated market, just so you know that. But again, if you are going to do penny stocks, do only penny stocks. Don't do both big caps and penny stocks. They don't work together. They're not the same strategy at all. And there's quite a lot of people that are super successful trading one stock, Amazon, Tesla, Apple, whatever, but they choose that one and they learn it and master it. Okay? Futures. Again, futures is the commodities market. What does that mean? You could have cotton, soy, wheat, and ES minis and NASDAQ and S&P all on the same. So do you think that the S&P is going to be working the same as crude? No, they don't work at all the same. Crude is super erratic. ES could be much more smoother. They don't work the same. You're looking at the S&P 500 companies. You cannot use the same method for crude, right? It's not the same. Crude is oil. It's a whole different thing. S&P 500 are 500 companies. You need to understand that and narrow it down. Options. Again, if you're going to be doing options, stick to options, right? Stick to it. Don't start going into all these other things, and then you're going to be like, oh my God, I missed my chance to exit or enter, or I didn't understand. And of course, today, crypto is a big deal. We all hear of Bitcoin, but here's the deal, guys. Crypto has over 6,000 altcoins and projects going on. So if you're going to do crypto, you got to also realize which crypto you're doing, what you're going to do. You can't just say I'm doing crypto. It's silly. You can't say that, right? Because it's literally 6,000 things going on at once. And some of them are insanely risky. Others are those solid tokens, right? They are more understanding and they have been around. So you can't have the same strategies, okay? I want to do a quick demystification of brokers and margin accounts. First of all, the brokers, their one and only business is your money in their accounts. They are not there to help you and support you and none of that. And if you think they are, get it through your heads, they're not. Their business is your money. And their business is commissions or other ways and margins. Margins is what I call loan sharking. I don't know if you guys have heard of margins, but margins is literally a loan sharking account. And when they tell you, oh, you are eligible for margin, they're just telling you, so if you lose all your money, you can borrow up to this amount of money. And guess what? If you lose that, you're now going to have to not only pay us back what you lost and didn't have, you also have to give me interest. Stay away from margin accounts. Every single broker has the option of you to say, I do not want it. It is not obligatory or mandatory. Stay away. The other thing with brokers, super important, back to the one instrument. Futures brokers really help you if you're a futures trader. They give you much better commissions. If you are an equities trader, look for the equities broker, right? Do not go into an equities broker with your futures account because you're going to need a lot more money. You're going to need a lot more commission. They are not specialized in that. For crypto, you can't even, like some brokers are now starting to do crypto. You don't want to go there. You want to go to a crypto exchange. They're going to give you the best money. They're going to give you the best options for the tokens. Be smart. Find your niche and go to that broker. There are many amazing brokers, reputable out there. Find the one that is for what you want to do. Understanding commissions and live feed. Do you guys know what live feed is? Feed is literally the gasoline we put in our car. It is literally the feed that you use for your charts. If you are a day trader, do not fall into the trap of delayed feed because you need right now this second live feed. Some, depending again on your niche, some you might have to pay for the feed. It's like $7 to $10 a month. Some have it included, but then they get you with higher commissions. Do your homework. Know what you're doing, but you cannot not have live feed real time. Do not even pretend, well, I have delayed. That's nothing. Then delayed is for when you're investing for 5, 10 years because you don't care what's going on in the moment. Okay, like I said before, platforms. You cannot day trade without a platform. You can't. You cannot have a crappy platform. You need a really good platform. There are hundreds out there today. So you do your work, figure it out. Which one is the one that works the best for you and work with it. A lot of them give you free demos so you can test it out. You don't have to fork up the money right away. And the most important thing is make sure your broker attaches to your platform interface. Otherwise, you're going to lose time in their dome going from one area to another. That is not a good platform. It is not the good broker for you. Okay, trading lingo. Really quick, guys, because it's amazing to me the amount of people giving their money, or I say donating their money to the markets and don't know basic understanding of basic things in day trading. Just like when we get into a car, I have the privilege right now. My son is learning how to drive a car. All that terminology we use when we sit down in a car. All right, put your clutch, press on your clutch, put your gear in first. That's a language of the car when you're driving, right? When somebody who's never stepped into a car, they won't even know what a clutch is, right? All right, back it up. Obviously, that's kind of understanding. But there are many things that in a car, it's a lingo. And now it's just natural to us. Same thing with day trading. You cannot press on the accelerator if you don't understand basic terminology. You will end up losing, right? So obviously, intraday day trading is literally intraday. You are in and out of your positions in that day. If you go over then, you're not an intraday trader anymore. You're now a swing trader or an investor, depending how long you hold. Bull market, it's just the market going up, right? Bear market, the market is going down. There's 3 trends that we have to really understand: upward trend, downward trend, and the sideways trend. And if you guys don't understand the sideways trend, I'll bring it down to you. It's literally 90% of the profit of traders usually gets lost here. This is a scientific fact. You could go online and check it out. Sideways trends eats up our profits and even more because a lot of us don't realize that it is a very important area to understand. Profit targets. If you guys do not have a profit target for your day trading, you will end up losing. Why? Because greed is always going to end up winning. You're going to be looking at your trade and it's like, oh my God, it's continuing. You're going to remove that profit and it's going to turn on you and take you out. Keep that profit target, split target, I don't care, but do not let greed win. And the same thing with risk management. You need a stop loss in place. You cannot have a mental stop. I cannot even tell you the amount of traders that tell me I have a mental stop. Never. I've had those mental stops. The ego will always win. You will always be not only stopped out, you're going to remove it and you're going to end up losing your entire account. If you're a real professional trader, you have a profit in place, you have a stop in place, and that's it. You cannot let greed or mental ego or anything get in the way. It will always win. You have to protect yourself. Again, I'm going to repeat the charts 1,000 times because you cannot be on Robinhood and saying that you're a professional day trader. It's never going to happen. So a chart, it's literally the holy grail. This is my chart. This is it. I don't have any other charts. I do not have multiple screens. This is it. Indicators. I personally only use 2 indicators. I do not like to have many indicators. You do not need a lot of indicators. The more indicators you have, the more analysis paralysis you're going to end up going through. It's just the way it is. Trending markets, I'm going to repeat it again. Learn the upward trend, downward trend, and the sideways trend, which I actually call the trader's worst enemy. This is where we lose the majority of our money. All right, buy, going long. I know we all have heard this, but let's just break it down really fast. I am buying, I'm going long. That means I am going in at a smaller price range, exiting at a higher price range. Selling, shorting the market. And if you're sitting here saying, well, I never short, then you're not a trader, because day traders, we sell or short the market probably more than we buy and go long. So what is a sell or going short? It's when you're entering a high price range, exiting at a lower price range, and taking the profit in between. Market entry versus a limit order. If you are a day trader, you will never enter anything at market, ever. Why? Because it's slippage. You end up losing money, and that also goes to show that you really don't know where you want to enter. When you have your limit order, you are telling the market, I want to enter here because this is what my strategy is telling me. And when you do that, you do not have slippage. You get in exactly where you want, and it goes to the same when you have your profit target in place. You don't exit at a market, and you have your stop. You don't exit at a market stop, because you'll always lose a little bit or sometimes a lot depending on the market. So you need to tell the market where you want to be in and where you want to exit, or either way, stop or profit. And that's called a limit order. So if you're doing market entries, you don't have a strategy. Okay, so you have to have a stop limit. I'm going to say this again, stop limit. If you're pretending with these mental stops, you know what, just please take your money and go and give it to a really good cause, because you will end up losing it all. I can guarantee that. Okay, so technical analysis. I personally only look at technical analysis. I don't look at fundamentals. I don't look at any of that, because it doesn't really matter. What matters is technical analysis, and that is the language of the charts. And this is what I want to talk about. This is that language. We're going to go into resistance and support. So what is a resistance area? It is literally the ceiling of the market. It's the ceiling. Okay, you have to have these drawn in, because the market respects areas and hits them over and over again. And if you don't have that drawn in, you will miss that all out. The same with a support area. It's the floor of the market. It's the floor of the market where the market is hitting it over and over again. And sometimes, and usually, it could totally change the market's direction, or it could have a breakout. But if you don't have that drawn in, you will never know it's actually happening. Reversal patterns. These are languages. These are free and could be spotted at any chart in any market, and it works the same for every market. Reversal patterns, double tops, triple tops, head and shoulders. And when you couple that with divergence, meaning that if your price action is going in one direction, and in particular for me, I use the MACDs, you could use the RSI, what other indicator you use for divergence, goes the opposite direction, showing that the market is weakening. It is losing its strength. And that's exactly what it is. And divergence, they're free. This is all free, and it will change your entire day trading game. I guarantee that. All right, so let's put this all together. Again, I have this and so much more in this free document that you can follow along, makingofadaytrader.com, makingofadaytrader.com. All right, so we all know about the breakout trades, right? However, if we do not have our areas drawn in, like the resistance and the support areas, we can miss out on the breakouts, right? So just a really quick example of what a breakout is. A breakout is when you are going in a specific direction, a trend, and then it slows down. It goes into that sideways movement. It tells you that this is indecision. This is where the market isn't sure what you're going to do. So you, as a trader, have to understand that and sit out and wait until it tells you what it's going to do. And then it could break through. But if you don't have your resistance or support, regardless of if you're going up or down, drawn in, chances are you will miss out on literally one of the most powerful trades in the market, in any market, by the way. Okay, so this is, I just want to do a really quick show of how I do my breakout trades. I use my indicators, the MACDs, which is on the bottom. It shows me strength. When it goes above the dash line or below it, it shows me that it's having a lot of strength in that direction. And that's where I look for my entries. I have my EMAs where I enter from. Okay, and again, if I don't have my resistance area drawn in, how am I going to be able to show where I could enter the market? How will I know when it actually breaks through it? Okay, so again, remember guys, makingofadaytrader.com. Now what I want to do is I actually want to go in to the live market with you guys and just do a little bit of a quick live analysis. Okay, so today I personally trade the ES Mini. So you can see here, I am a futures trader and I am on a chart software that works with futures, right? Because again, when you are going to finally realize which niche or which instrument you want to go on, you want to be in that specific market all in, meaning you want to get the right platform, you want to work with the right brokers, everything. So when I open up my charts, I immediately put in where is my support area and my resistance area. And as you can see here, areas, they are just that, right? And they could become one to the other. It's just showing me that this particular price range is really strong and the market has been really, really respecting it, right? You could tell right here, this has been a very, very strong support area. Finally broke through, massive breakout trades all over the place with a lot of confirmation in the MACDs. It went down here. It did not last very long. And if because I trade very short time frames, for me, this is a strong support area, which also, as you can see here, the pivots are going down, but the pivots are headed up. So it's telling me when I'm in the live market that there is slowdown and that there is weakness in the market. And this is how I read it. So when I see that, I know that there's a very high potential of change. It does not tell me to change until there is a massive confirmation, which is exactly what happened here. Boom, massive confirmation. And guess what I'm going to be doing? I am going to be looking for those new trend trades. That's what I'm looking at. And then I'm seeing that this is another super strong area. And boom, I have another beautiful breakout right here. And that's when I'm going to be entering those breakouts. And now, which happens very normally, this is very typical market behavior. After we go through for a strong run up, or it could be strong run down, we have a consolidation area. We have a slowdown. We have a sideways market. So when you have those slowdowns, and look what happens, it becomes really, really choppy, grindy, uncertain. You never want to be entering here and trying to guess what the market is going to be doing next. So what we do is we are prepared. We already have our resistance area, our support area drawn in. And now I'm going to wait to see if it's going to be a breakout. I'm looking for all the confirmation, or if there's going to be a new trend, which also is through confirmation and literally just reading what my market is saying. MACD's, Talbot, is the least lagging indicator that I have ever worked with. And at this point, guys, I've been doing this for 9 years. I have had 10 indicators, 3 monitors. And the one thing I have to say is the MACD's, for me, has been the least lagging indicator I've ever worked with. It's amazing. It gives me so much information way before it even happens. I'm an incredibly conservative trader, and I have to say that the MACDs help so much with that. Another thing is I use the 610 tick chart. So this is not anything unusual. The majority of platforms have this. So it's the difference between a time frame and tick charts. What is a tick chart? As you guys can see right here, it says ticks remaining. Each one of my candlesticks, I have 610 transactions happening in the real time, in the moment. And that shows me exactly what's going on, the amount of volatility, the amount of people in the market. I do not use volume indicators because they are incredibly lagging. So you don't know exactly what's happening in the moment. If you're sitting at a 5-minute chart with a volume, it's not full on. It could be super boring. And you're like, why is this so boring? But that's the cool thing about tick charts. You see exactly what's going on in the moment. Exactly what's going on in the moment. And I can actually see that there is volatility picking up. So soon this is going to start to break through. Okay, so let me get back. Let me know if you guys have any questions up to this point at all about the chart, about the indicators, about anything at all. Let me know. So this is the indicators that I use are the EMA lines and the MACDs, and that's it. And a tick chart to avoid any volume discrepancies, basically. Okay, guys? All right, so let's get back into the presentation. So basically, we have everything that we need to take action, right? I'm sure the majority of us sit and watch a lot of YouTube videos or read books or this and that, and then try to put it into reality, right? We try to put it into our charts, but the reality is you're alone doing it. I mean, I know day trading could be a really lonely thing and without much feedback of understanding if I am doing it right. How do you know you're doing it right? How? Who's there to help you truly understand if you are doing it right? So imagine if we could do this together every week, me and you sitting together every week. I have a very, very special offer for participants only for people that are live right now here with me. I am offering a really special deal. I've come up with something only for you guys, and I want you guys to listen up, okay? Because I don't have a lot of time to really get into it. So if you guys are watching Netflix in the background or checking your email or making a sandwich, just take these 2 minutes to really just pay attention and focus because it's a really rare deal, and I just really want to share that with you. I want to break it down for you guys really, really quick. What I'm offering right now, only to the people live right now here, is a weekly live trade chat room. I run a weekly live trade chat room. It's me. It's never a moderator. I don't hire, low income, like moderators, which they don't really know what they're doing. I've been in many, many chat rooms when it's run by moderators who don't even trade, have no idea about trading. They just run a room, which unfortunately becomes a big loss. I have this. So basically you are literally working with me live. It's like me sitting on top of you in your living room, trading live with you. We are live trading, taking trades, implementing, talking, understanding. You're sharing your charts with me. You're asking me questions. It's happening in the moment. It's not a guessing game. And on top of that, in between the live trade chat rooms, you're going to continue practicing. You're going to continue trading and all that. But what I give is one-on-one mentorship, live coaching, me and you. You send me questions. You want to talk on Zoom, whatever. Unlimited coaching. This literally is worth $5,000, if not more. Okay, this is now included in this super special offer that I am giving today. And I also have a full curriculum that you could always go back to because I know we are all life learners. Lifelong learners, we want to learn. So I have a curriculum that I break it down in bite-sized videos, 5-8 minutes of all the different processes that you can learn on your own. And because you are working with me one-on-one, you can send me all of your questions to me during that process so that you are really understanding how you are doing it well. I have students from all over the world. Okay, this is not just something I came up with. It has been tested and working. And it's not only for traders in the US or traders in Canada or Europe. No, I'm talking all over the world. My students are everywhere, and you could apply this anywhere. And these are just some of my students that I have worked with. These are some of their testimonials that I have worked with, all of these different students here. Again, Marina's right, start today. I wish I found Marina sooner. Everything starts to make sense as you go through her course, and her great support is nowhere else to be found. Great course. I had zero experience, non-techie, stay-at-home mom, and I'm really catching on. I just wanted to let you know I'm thoroughly enjoying the classes. I I was a professional trader in progress, and with all of your help and insights, I'm making it happen. So again, everything that I am offering for you guys, the total value, live trade chat room weekly, live with me. So you are literally getting me with the live market, implementing everything. Unlimited one-on-one coaching and mentorship coaching with me, and the unlimited curriculum access. This whole value is $6,000. However, for participants only, I have a special membership that I am working on. $24.99. You get started, literally everything I just said, $24.99. $24.99. You can get started with a trial membership. Go here right now, daytradingoffer.com. 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 This is only available to you guys. It is a trial membership. You start with $24.99. You can't go wrong. $24.99. You get access to everything. You get access to me, everything at once. Here's the thing, guys. I only have spots for 25 people. So you got to hop on this right now because I don't have access to anybody else. 25 spots only, one-on-one mentorship because of that. Okay, $24.99 trial membership. Daytradingoffer.com. Daytradingoffer.com. Okay, so go here. This is when you get here. It's a membership trial for $24.99 the first week, and then it goes on to $49.99. I only have spots for 25 people. 25 people only. $24.99 trial membership. So again, guys, please go here, $24.99, daytradingoffer.com. And I know that there's a couple of questions. So it is a trial membership at $24.99. You get to see everything at once. And it is for the week. And then after that is $49.99 per month. Everything. I'm talking, guys, you have unlimited one-on-one with me. Live trade chat room. Go if you can find anybody who offers this kind of a deal, please let me know. I would love to meet them. So take advantage, guys. And again, you can stop anytime you want. There is absolutely no strings attached. Daytradingoffer.com. And thank you so very much, Anna, for having me. I really, really appreciate it. My dogs are just completely going bonkers right now. And thank you, everybody, and have a super week.
Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci system. In this webinar, we'll be teaching you how to trade as hedge fund manager does with Alpha Fibonacci system. But first, I would like to remind you a very important disclaimer. None of this webinar constitutes a financial advice. I'm here to educate you and empower you. The content of all the materials, all the software is for educational purposes only. Past performance not indicative of future results, and all the risks with Alpha Fibonacci software or any trading system involves risks. So please never, ever, ever trade with risks you cannot afford. Only trade with what you can afford, with risks appropriate for you. Please note that all the testimonials from my incredible students, which include hedge fund traders, had never been paid for. All of these testimonials are absolutely believed to be genuine and factual. This is a required disclaimer. In this webinar, we will cover how to trade as a hedge fund trader with Alpha Fibonacci system. We will go over multiple examples from day to position trading in all markets. You will see how hedge fund traders and retail traders trade Alpha Fibonacci system. And most importantly, you will be able to identify how you can trade as hedge fund manager with the Alpha Fibonacci system. Briefly about myself, I'm a mentor, I'm a software developer. I mentor traders globally from beginner to hedge fund manager since 2011, how to trade on all instruments. I developed multiple systems. I worked with traders on Wall Street. I worked with JP Morgan traders. I worked with traders from beginner to trader of every caliber in US, in London, in Saudi Arabia, in New Jersey, in any state, in any country, from micro to macro account, traders who trade the proprietary system utilizing all the rules of hedge fund managers. I presented hedge fund events. I utilize my own system for my own positions. I write, I teach, I hold multiple degrees, and most importantly, I live and breathe what I do. As since 2011, I founded proprietary system, Fibonacci Trading Institute, our podcast channel, and Fibonacci Trading YouTube channel. So this is our community of traders all over the world. In this photo, you see traders who trade very large accounts. You also see traders who trade very small accounts. I visit traders all over the world who are serious about trading, who apply everything you see in this webinar to accounts from macro to micro accounts. On the left, hedge fund manager in Switzerland. I met with Victor in Switzerland. He's using everything on long-term Forex. I just met with Jason last week in California. Jason trading metals. You will see in podcast Richard and how he quadrupled his retirement account utilizing all hedge fund rules, and how Sam put his daughter through Harvard using Alpha Fibonacci system on options, and how Emmanuel brought his incredible wife Jennifer to the course, who are utilizing all that you will see next on accounts from multi-million, multi-billion to macro to micro accounts. Hedge fund traders, number one, do not ever chase indicators. Hedge fund traders do not chase cheap systems. So if you want to become top 1%, number one, you need to stop thinking and doing what majority does. Number two, in order to become top 1%, you need to start doing what minority does, which is focusing on pure price only. So let's review the events in the current crisis and what top hedge fund traders have done. As I just came back from meetings in Miami, meeting with traders and hedge fund managers who trading Alpha Fibonacci system. Let's review the events of the current crisis and how hedge fund traders trading during these extreme times. So 15 minutes ago, I finished teaching the class. 15 minutes ago, I was teaching my incredible traders that market stock for the last 4 weeks at institutional resistance, because this is a chart hedge fund traders and hedge fund managers trade, because they move multi-million and multi-billion dollar positions. But how in the world did the system identify this institutional reversal entry many months in advance? Let me remind you how hedge fund traders trade with Alpha Fibonacci system during the worst crisis. This is the system before the sell-off. December 2019. Price reached institutional reversal zone. So when market selling off and market in free fall, what do you know at the bottom? What do you see? Institutions will be taking position at this level. No matter what the news blasting, no matter how much negativity there is in the news, you know many months ahead. Institutional buy point on March 23rd is reached. Let me remind you how day trading charts looked on that historical week, when still you never ever heard the good news. But when you looked at the chart, you saw extremely clearly. Institutions were buying the markets viciously. This is how hedge fund traders trade. Pure price and alpha Fibonacci reversal levels. By looking at this historical chart this morning, it's no longer 2200 level, is it? We are at drastically higher levels. There is no more 2200. There is historical institutional resistance. Miami is New York. Hedge fund traders holding positions. And that's the power of the system. This is the chart you look before the start of your day. You are not chasing junky indicators. You understand and moving your very little account with very powerful traders. As you will see, what played out in the room this morning. As every single strategic, precise, institutional trend system must obey the rules and remove speculation, removes gambling, and allows trader to trade markets as strategic alpha Fibonacci chess across all instruments. So when during crisis you see this very important moment plays out on March 23rd, have you heard the good news? Or have you been stunned seeing market rallying with vengeance? You're looking at this chart when you're moving your very little account. And since March 23rd, you've been buying at day trading levels, riding Goldman, JP Morgan, Morgan Stanley, BlackRock power. Because during sell-off 2020, institutional support every single time respected. Institutional orders waiting for you. So if you understand what hedge fund trader does, with whom I work every day, in exact same room where traders who trading micro accounts do, you are simply trading exact same way. You are never, ever trading against them. Because this is a very powerful lesson. The biggest rally in 100 years, when the top 1% became 50% richer, and Miami becoming New York, it's for one simple reason. No one wants to pay the taxes on the biggest profits in 100+ years during the biggest crisis, correct? Price can be stuck here for many months and years. It's going to take a very tragic event for market to collapse. But this requires your ultimate skill. There is nothing in common between trading this versus trading in May 2020. So if you understand this and you're trading your little account as hedge fund trader does, this is the most important chart you start your trading morning with. This was a very powerful week, and we will review again and again and again. Your micro account power, your macro account power lies only with powerful strategic preparation for your trade. This is my traders this morning. As CEO says, those institutional levels are so potent that clearly present the most objective roadmap and also showing you when not to enter position, never ever second guessing. Every single one of these traders just started the course. Some of these traders a couple of days, a couple of weeks ago. Every single trader trading different account. But as Rajesh says this morning, an hour ago, before Alpha Fibonacci system, I would have normally been trying to trade the garbage. Not anymore. Rajesh sharing, he shorted NASDAQ this morning and it hit his targets, 73 points in less than 15 minutes. This is a trader who's been trying for many years. This is the greatest system ever. As CEO shares traded the textbook setup in European session. This is our community of traders. Just this morning, King has zero interest in NASDAQ and S&P. He's trading Forex and so does Denzel, Manu in London. And all of this just in the previous hour. This is Alpha Fibonacci system in the last 24 hours on S&P mini future at crucial institutional levels. So if you understand this, if you understand the system's precise power, there is no speculation here. You are not gambling. You're respecting the price and you're trading with precise rules, with precise targets. As you see, target key is reached, price collapsing. This is a crucial target. When price reaching this target again, price collapsing, and then completely reversing from reversal zone. All of this institutional entry points. Can you obey the rules? Can you do this as traders do globally on all instruments? Hedge fund traders trade indicator free. Hedge fund traders have zero interest in junky indicators. They're not speculating and not chasing $99 or $100 system. They're not listening to junky news. They understand what matters. They trading pure price. So if you traded pure price with Alpha Fibonacci system, this been institutional entry point, this bottom since early April. This is a chart that's been present in the trading room for weeks. Since April 14th, institutions been viciously buying the market non-stop. This morning, it's a very different trading range. And that's what intelligent trader understands and does, preparing each and every day. Because each and every day your trading range will change. And that is crucial, critical preparation for your trade. Alpha Fibonacci trading system is indicator-free system. It is complete semi-automated system with multi-market scanner and proprietary Alpha Fibonacci software. This is what system looks like on S&P mini future at crucial institutional levels. And when the multi-market scanner running in front of you, and when scanner give you congruency, you enjoy the ride. With a single click, you can add any instrument of your choice. But this is day trading only. You can trade any instrument you choose. It is absolutely your personal choice. System consists of only two components, indicator-free price and proprietary Alpha Fibonacci retracements. Nothing else is needed ever across all instruments. So stories of my students all over the world is the reason I live and breathe what I do. You can listen to Richard's podcasts on the website. You can view Richard's emails. Thousands and thousands of emails keep pouring from traders all over the world. Richard's story is absolutely spectacular as he shares. He took trading seriously. He doubled his demo account. And when he started on November 9th, After doubling his demo account, he started trading with $3,600 account. December 7th, 3,600. January 22nd, 11,500. February 24th, 18,000. April 29th, $37,000 account. This trader thinks and trades as hedge fund trader does. Richard had tried for many, many years before. Nothing is stopping him anymore. No cheap indicators, no speculation here. Pure price and spectacular effort. So please understand and listen to Traders Podcast, because if these traders can trade any instrument with precision, so can you. From day trading charts to long-term Bitcoin, pound, dollar, Apple, anything and everything, you choose. So here's Alpha Fibonacci system on Apple since 2015. I present at the biggest hedge fund convention when Apple in free fall, but 93 is a crucial support. This is Alpha Fibonacci support, and what do I say? This support will override any and every news. If this support remains intact, Apple will skyrocket despite worst earnings in 13 years. And that's exactly what Apple have done. So what would your investment decisions be if you understood that trading with Alpha Fibonacci system is drastically more powerful than trading on the news? What if you understood where your next target is? What if you understood where reversal zone is and you knew how crucial this support is? What if you protected your investments and you knew where a great place to buy Apple again is? So when Apple in free fall, you are very well prepared. You know where to buy the bottom. That's the power of institutional reversals with retail and hedge fund traders who are trading globally, any instrument they choose. So I love this. When Andy joining the course, hedge fund manager in London, he introducing his 14-year-old son, Dominic. As you can listen on podcasts, as you will see photos next. So as you could see in this room, we have Bitcoin traders, stock traders, futures traders, option traders. Jennifer with 2 little babies at home. But every single trader think and trade as hedge fund manager does. I don't know anything less. This is how I teach you how to think and trade. This is a purity on gold future. There is no speculation here. Pure price, pure stop, pure targets. And when I speak with Gerald yesterday, and Gerald coming back for another podcast, Gerald is 37 actually years, CME floor veteran trader. He loves trading with Alpha Fibonacci system. Gerald introduced his brother, hedge fund manager, to the course. This is long-term system on Amazon. Amazon mid-trend stuck between 2 levels. Many months and years in advance, you understand where reversal zone will be at 2000 level. So when Amazon in free fall, no one should be surprised, despite best earnings in many years. And when Amazon keeps selling off from this level, $700 per share, $400 per share, $300 per share, time and time again, it's because it's Alpha Fibonacci institutional reversal zone. Would you like to trade long term? Would you like to day trade? What kind of trader are you? This is how hedge fund traders trade purely with rules. Scott, hedge fund trader in the room, was absolutely spectacular to have, as he was sharing with traders what and how he traded each and every time. Stocks, forex, anything and everything, every single trade they choose. These are spectacular returns for intelligent hedge fund trader on stocks. Ken chooses to trade Bitcoin. So when you come to our website, this is where you will find all of the stories, all of the journeys of our traders. You can sign up for the trading room. If you enter your email, you will receive a guest pass. But if you will see all of these traders' journeys and stories, traders making movies about their lives. If these traders can do it, so can you. You can trade on any instrument you choose. You saw Ken's post in the room. He's trading Bitcoin, correct? View his journey to success during crisis. View how Brett went from $10 an hour to $3,500 per day. And Jennifer and Emmanuel, incredible couple. And how these traders trade, obeying hedge fund trader rules. Identical rules for trader of every level. Nothing less. That's it. You're trading with hedge fund traders. You never ever trading against them. And when they're trading with you, with community of our traders, you understand where power lies. When you prepare and strategize with institutional power only. So what would your trading be if you knew in advance were institutions taking positions? As again and again and again, what is the biggest lesson you learned during this crisis? The biggest vertical rally during the worst economic crisis is a very powerful reminder. Trade pure price with Goldman, with J. Morgan, with Morgan Stanley, and with the power of Alpha Fibonacci system. If you know many months in advance what identifies institutional crash, you are not losing your sleep. You're turning off the noise. You are focusing on pure price. So again and again and again, very powerful reminder of the events during historical institutional reversal. There was no good news in the news, but exact same traders, exact same top 1% that owns news channels that blasting panic and negativity been buying this market. So if you understand where institutions taking positions and you trade as hedge fund trader does, no matter how small or large your account is, you understand markets are frozen. The biggest profits during the worst crisis is a spectacular lesson. If you know where institutional reversals are, and you trade and think as hedge fund traders do, you are always on the right side of the market. So this is this morning what my students posted. I love this comment from Rajesh. Let's find where he said this. What is the biggest benefit to Alpha Fibonacci system? The best part is making profits without heart palpitations. These are intelligent, strategic traders this morning alone. So if you strategize and think as hedge fund trader does, the sky's are the limit. And that's the comment from Theo. In the middle of the night in Australia, the trading with those powerful institutional levels is going with the market flow of the smart money. Also being able to draw these levels manual as taught in the course is winning a battle before it is even fought. And that's how traders trade all over the world. Future stocks, Forex, Bitcoin, option, anything and everything they choose. So please, view and see what traders share, what they think of the horse, and how they trade. Because if these traders can do it, so can you. Any instrument, any account, traders of all backgrounds. So if you decide to trade Dow, very powerful, very pure instrument, spectacular instrument to master alpha Fibonacci system on pure entry, pure stop, pure targets. You will never, ever, ever need anything else. It is all playing out in front of you in the live markets right now. So again, you saw Andy's comments in the trading room. Hedge fund manager brought his son to the course. So 14-year-old boy knows what he will do, and this is what he does during crisis. What is stopping you? His father utilizing alpha Fibonacci system on very large retirement accounts of many, many, many clients. His son utilizing alpha Fibonacci system on day trading account. Again, listen to the podcast and see. This is a purity. This is a precision. This is the power. So let's review oil with alpha Fibonacci system in the last 7 years, shall we? Here is oil at institutional bottom in 2015. You are very excited because you understand this is where institutions will be buying oil. You understand where to enter position on oil stocks, and you can invest with options on oil or various other derivatives. So when oil is skyrocketing, you are not surprised, are you? This is one last brick wall until 2 years later, oil doubles in value. You understand many months in advance that institutional sell-off at reversal zone is expected. So when you obey the rules, an institutional sell-off in a progress, and you day trading oil, you're shorting with institutions. You are not buying near this level. When oil in free fall, you also know many years in advance where institutional entry points will be. So if I forward 2 years to 2020, as you understand, oil contract changes, numbers changing slightly. What do you know? Many years ahead. Reversal zone below zero. One step at a time. This level is broken. Points to reversal zone negative number. So when oil skyrocketing from this level, and you understand that's where multi-million and multi-billion dollar positions are, you enjoying buying at the bottom with them. You never ever shorting near this level. And that's the purity and power of the system. In the last 6 years, oil no longer at the bottom. What would your trading be like if you knew where multi-million and multi-billion dollar positions are? Would you sleep better at night? Would your investment and day trading decisions be much better? As hedge fund trader identifies trading range prior to placing a trade, every single day trading range varies. Market conditions change daily. If you understand that, that's a beautiful thing. If you don't, trading becomes speculation. It should never, ever, ever, ever be an option. So if I bring up to your attention S&P mini future this week, this was a very powerful reminder. This was institutional bottom on May 4th. On May 5th, it was not. In front of you, alpha Fibonacci reversal zone playing out. Software showing you that. It's a brick wall. Do not enter into. But with alpha Fibonacci system, you know this hours and days in advance. You are not speculating. You are not gambling. You are obeying the rules. And it doesn't matter what chart you trade. Any chart you choose to trade, identical rules apply. The only difference, risk management and trade hold time. So if I bring up to your attention Tesla, it looks exactly as S&P this morning, except this is your long-term investment decisions. Tesla crashed from alpha Fibonacci reversal zone, identified many, many months in advance. On Tesla, this is critical institutional support. This support is out, Tesla in free fall. Intelligent trader understands what to do with his and her position on Tesla, as this institutional support and this institutional reversal zone holding the key. You are not speculating if you're trading Tesla. You are not speculating if you're trading S&P. It doesn't matter if it's 5, 10, 15, any chart you choose to trade. All identified. Hours, days, weeks, months, and years in advance. All depends on chart you trade. So what would your trading and investment decisions be like if you knew where to trade and where not to trade? Forex traders, of course, trading alpha Fibonacci system. This is bound for the last 12 years with alpha Fibonacci system. In front of you, critical support. 1300 on pound. Do you remember this level on Tesla? Do you? Do you remember how crucial this is on Apple? Do you? It's exact same thing in front of you on pound. It's exact same thing this week on S&P on every single chart. Key entry points, correct? But when this level is out, S&P in free fall, one step at a time. But when Forex manager, hedge fund manager in Switzerland trading the system, this is a chart they trade. You understand many, many months ahead where institutions and hedge funds will be buying the pound. Has anyone heard great news in Britain? Tell me. Has anyone understanding where this rally is coming from? During full lockdown, pound rallying viciously? Of course, it's the bottom. You knew this many years ahead. So no matter what chart you trade, no matter what instrument you trade, alpha Fibonacci rules and system applies. But if you day trading with alpha Fibonacci scanner, synchronicity is a very powerful part. So when the scanner giving you a single alert, there is no institutional power. This is weakness. When you're trading with a system, you understand when institutional power is present, you're receiving multiple alerts and you're choosing your ultimate trade. And you trade stress-free without need to stare at the charts, without need to chase, without need to speculate. Scanner removes need to flip chart, chase the markets, and place trades after the fact. And with a single click, you can add any instrument you choose, or you can add all of them. Done. That's it. But if you're investing and trading long term, you utilizing system on any platform of your choice. This is what scanner looks like when it's giving multiple alerts. So crucial step to success, to work with experienced mentor, with established system, with community of supportive traders. Thousands and thousands of emails in the last 10 years. So many podcasts, so many journeys, so many stories. All you have to do is think and trade the top 1% does. I don't know anything less. I don't accept anything less. I teach you how to stop thinking and trading as majority does. That's it. So if you do that, the skies are the limit. It never gets old. I promise you. I simply love what I do. So please, when you come to the website, listen to stories of our incredible traders. As over the years, I always stay in touch with my students. When Brad came to me, he's been trying for many, many years. He worked at Best Buy making $10 an hour. Right now, he's making on average $3,500 per day. And when this week I checked in with him again, it's a very personal, a very warm exchange. But as Brad says, baby always needs a pair of shoes. Boom. It was nice knowing where everything was. 3.75 points, down by 11. What does this mean? It means S&P at institutional levels. This trader knows this extremely well. That's it. You will never, ever, ever, ever need anything else. So if you think a top 1% does, you can trade like bread. Phenomenal effort from brilliant human being. So please understand, if you want to trade as hedge fund trader does, which Carlton does after trying for more than 12 years, so can you. Stop thinking and stop trading as majority does. Come to the website, join us in invitation for the trading room. Read and view what traders do. It never gets old, I promise you. Because if these traders can do it, so can you. In exact same room, traders who trading options, who trading stocks, who trading forex. But every single one of these traders who becomes successful think and does what intelligent trader would do. Never chasing indicators, never speculating, never ever throwing random trade into markets. So if you come to the homepage, simply choose from option appropriate for you. This is a lifetime system for any platform or lifetime software for Ninja 8. So when you will listen and view what traders do all over the world and view movies traders have done about their life, During current crisis, we're offering the biggest discounts ever. Lifetime system with 3 months group course with video library modules available to you for any platform. But if you will choose second most popular option, this is software for Ninja 8 and lifetime system for any platform with 3 months group course with video library and modules included. In private mentoring, I have only one spot. In private mentoring, I test you, I quiz you, I give you homework, I keep you accountable. Of course, it's not required. You are the boss. But I test you and I teach you exact same trade I taught to JP Morgan trader who left JP Morgan and started his own hedge fund. Any questions for me? Do not hesitate to contact me. Simply pick up the phone and call 925-257-4298 or info@fibinstitute.com. If you're serious about trading, if you're done thinking as majority does, I look forward working with you. Thank you so much, everyone, for your time today. I am off to live class. I am off to mentoring my incredible traders. You are serious about trading? I look forward working with you. You will never, ever, ever need anything else. Thank you so much, everyone, for spectacular morning. Have a magnificent day. First package does not include software. Second package includes software. Second package, lifetime software for Ninja 8. First package, any platform. My joy and pleasure. So Faribors just joined for private mentoring. Amazing to see you, Faribors. I will send you all the instructions. So guys, if you're signing up for private mentoring, you need to speak with me. I'm absolutely full. For group course, simply sign up on the website. Absolutely your choice, what you will decide to trade. But second option includes software for Ninja 8 and lifetime system for any platform. Thank you everyone. My joy being with you. Thank you so much for your time. Be well, make this world a better place. And again, do not hesitate to contact me. I always look forward to speaking with you. I posted a link to contact us section. Simply pick up the phone and call, but please, as I said, I work with complete beginner traders. Did you see 14-year-old boy who trades the system? You can listen to beginner trader like Pablo, complete beginner trader. 14-year-old boy, complete beginners, joining the course all the time. So traders in exact same room as Pablo, who never pushed the button on their computer. Never, ever, ever. Neither did 14-year-old Dominic. If they can do it, so can anyone.